That might have worked. Oh my God, I'm live. Ooh. Please tell me I'm live. Oh yeah. I'm kind of live. Check 1, 2. Hello, darkness, my old friend. Hello, darkness, my old friend. I think I have that down here somewhere. It's over here. I don't know how it got that far over there. I gotta leave it over here. Hello, darkness, my old friend. And the stream is back up on every other site. It's now up on YouTube, Twitter, Kick. Well, it's not really a fix though. Like unplugging it and plugging it back in is not a fix, and doing it repeatedly, like 10 times, is still not a fix. And then there's like carryover by layouts or like scenes has like it like carries over. It, like once it breaks the like the Streamlabs server breaks a connection, it breaks along the entire chain, and then it'll fix on one, and then not on. It'll like fix on like the server side routing will be broken, and then you'll fix one of the server side routing, and then the other server side routings are not communicating. So you have to like, oh, what's going on? You couldn't comment on Twitch. Can you comment now on Twitch? I don't know. I think this is server side. I don't think it's me. I got all kinds of funky shit going on. Like it, and I want to assign it to one thing, but it's not. Like I got this over here. Like I've got like streaming problems. Like this is a bypass and go live thing from multi-streaming. And there are reports of Streamlabs down. This morning, there are reports of Streamlabs down, but it could be any number of things. It could even be from my end. Like these capture cards don't play well on USB 3 or 4 or 10. So I need to install, and I haven't installed it yet, but I need to install a PCI based capture card, which is like instead of like using HDMI ports and USB ports, you're like direct into the matrix. All right, I promise we're gonna do this show today. I fucking promise you. I promise you. Give me a second here, guys. I gotta see if the multi-stream chat's on. Hold on, guys. Good morning out there. How y'all doing? Let me just check this over here for a minute. Yeah, there are people commenting right now on YouTube, and I'm not seeing any Twitch stream or any chat right now either. Multi-stream chat's down on my end. But I see a bunch of comments. What's up out there? Sorry, it's one of those mornings. Until I get I have like 2 more things I got to do. I have to bring my PC to Micro Center, and I have to install some hardware, and that's on my end. That's to make sure that this is not from the server side. So bear with me. I know it's FOMC day. Like, hold on here. It is FOMC day, so we'll start this whole process over again. But okay, so a few things here. Let's start at the top here. Let's start at the top. The top is this. The stream is now on YouTube, Twitch, Kick, Twitter, and I don't know where else. But I know it's on. I think it's on those 4 platforms. If today is FOMC day, if you're watching on YouTube, I left the comments open for subscribers, which is free. You just have to click subscribe, and it doesn't cost anything. It's free. And you'll be able to chat all day long today on YouTube if you prefer YouTube to stream on. For the rest of you out there, I recommend that you watch us on Twitch because there's no native delay. YouTube on a live stream gives a native delay, and it creeps even when you catch up. But YouTube's has a native delay of anywhere from 7 to 15 seconds. If you watch us on Twitch, it's real time. The delay I think is like seconds. Yeah, Kick is also like that too. And so just a heads up. I don't know about Twitter. I haven't checked it. I should, but I haven't. But you can watch us on Twitter on the handle Trade the Trigger is the name of the handle at tradethetrigger.com or at Trade the Trigger on Twitter. You can watch the show there too if you want. And my favorite, I think, all around is Twitch. On Twitch, you can comment for free. If you go to Amazon, if you have an Amazon Prime subscription, you can just Google search Amazon Prime subscribe to Twitch streamer, and you can then comment for free. That way, Amazon Prime, and if you guys want to take money from Jeff Bezos, I'm always stoked for that. For him to pay your subscription, so it's an easy way for you to like always be able to chat, to always have real time. If you ever want to, if you're like me, there was a time when I didn't want to watch Twitch. I'm an old boomer, right? Supposedly. Once I started watching shit on Twitch, it was awesome. The learning curve was quick, and I didn't have to keep hitting the cogwheel on YouTube. And if you ever watch a live stream on YouTube, what you can do is hit the cogwheel, hit settings, and you speed the stream up until it catches up to real time, and then it'll stay real time for maybe a minute or two, and it starts to creep back to that native delay again. So you have to like hammer the button if you want real time on YouTube. It's my only issue with it. What else? On Monday, I streamed 12 hours, I think. I took an hour break, but I streamed a 12-hour day on Monday, basically, I think. My voice yesterday, or when I woke up yesterday morning, my throat was just like a vice. As a matter, and today it's really bad still. So you might hear me speak less today, only due to my throat. I would be blabbing your ear off all day long otherwise. But I am in a pretty bad off on my throat right now. It's inhuman to be streaming that many hours and talking for that many hours in a day after day, repetitively for, once you hit like 6-7 hours, it becomes like a marathon session. And that's my fault. I was like feeling really good on Monday, and I'm like, yeah, let's do the stream. Let's do some earnings trades for people. And I shouldn't have done it. I should have taken the break and maybe spent a show yesterday doing it or something like that. Now today, that is FOMC day. This is also the last FOMC for Jerome Powell. Or like a 99% chance this is his last FOMC. It's not guaranteed, believe it or not. You still have to get washed through, and you still have to get the Senate confirmation and all that kind of stuff. and I don't trust anything from Trump. Like, I would never be shocked to see Jerome remain as the Fed chair. I kid you not, even at the last minute. Now, we're coming in FOMC. This is Jerome's farewell party. I think you could make an argument in this farewell party that the market spikes on it, on his last FOMC. But there are mixed signals today. When I looked across on gamma, ICT, triggers, Elliott wave, traditional charting, all that kind of stuff, we have mixed signals on where we should go today. And furthermore, we were trading up to, let me go up here to something up here. Maybe, hopefully I got a camera up here. Sweet. This is SPX gamma. Now, we hit that 7170 that we talked about. We had that 7170 pin. And we also have a pin at 7, or there's no pin today on 720, but obviously 720 is a target, right? 7200. I said 720, but 7200 is a target. And you also have the roll effect, where you're rolling calls higher. Now, remember that these inflection points are normally take time. Like, you come up and you reject it, right? Then you come down here, you hit an inflection point, then you come up and you finally hit it. You begin the roll higher, and you think you're going to 7,300, but you're not. You're going to get shanked. As soon as the call rolling stops, you're going to get sent low again. Normally, not always, but oftentimes. And then you'll finally go up there and hit 7,300, barring exogenous bad things down here, right? But that's the thesis here, at least, right? We're working on that thesis. That this is the way here. Now, we do have some issues with where we are in time, which is we have FOMC today, we have month end, and these are all opportunities for the market to unclench, for lack of a better way to say it, right? But for the market to unwind, unclench all of that volatility. And we didn't get that on Vixpiration. We didn't get it on OPEX. So the market is looking towards FOMC, month-end flows, bad data, SOH, whatever that they can get, any kind of combination of all of that volatility to get the market to kind of break lower. So the market is looking for that. And even here, up here at this 170, you are getting some call rolling and then call selling at the same time, and you'll get more of this action as we go up there. You'll get more of that like price action going up there, but you're not going to get a big call rolling drive higher unless you trade over this 7,200. Like, you need to get above this to begin selling 7,225, 7,300, etc., etc. Here, let's go over here really quick, bottom right hand side. And we have to look at one other thing here too. And I showed this earlier to I had the show running on Twitch. I was trying to get any kind of show up that I could. But we're going to look at this together. We're going to go to a daily candle here. And there's a bunch of mixed signals on SPY right now, or on the market right now. There are a bunch of mixed signals cross market. We should be going up, but we have a binary event. And binary events like FOMC, for me at least, I use them as an ability for the market to go places where it can't otherwise go. If that makes any sense to you. So if we're at a major bottom and we can't get out of the bottom, we're looking for a binary event to flip us to go up in a way, right, to break out. And the same happens here in these tops, where you're looking for an opportunity to step out of the market, step away from the markets, and hopefully gets the market to come down a bit so you can buy a dip. It's an opportunity, basically. If you look on a few things here, I want you to see a few things. Okay, you've got this island here. This is kind of like a poop island, right? You got poop island right here. right? Poop. We call this Poop Island. We got this up here, but you want to remember that this is the actual island down here. Like this is the island. This is the one that threw us up. This is the this is the FOMO throw up here. This is the consolidation, and we're looking to see if these guys will sit back in or come back in and buy this stuff, buy this or not, right? And if you're just counting candles, just pure price action, I want you to look when you like. I have us going up today like this, like mooning. But if you look at just candles right here, if you're looking just at pure candles here, notice how this one right here failed to get a new high. Like this got the new high on this one. And then this one right here failed to break above that high right there. So what that did was it allowed the market to get blasted to the downside. It ended up putting in a new low over here too. Here and here. Now, it did recover. And that's what we're hoping for from this over here is for a recovery, but the downside is kind of showing us that it's there to blast to the downside. So we recovered, right? And watch this. We got a new high. We got a new high. And then yesterday we got a new low. And this is where the tell is. You have a lower high here. You have a lower low here. And when we come into today, this implies that the door is, hold on, let me just delete all this for a minute. I want you to see that this candle right here took this candle out. See that right there? This candle actually took out this candle. And what that does is it opens this whole candle up to trade today. Okay? And with the lower lows and the lower low over here, there is potential for us to trade all of this. How deep, I don't know. If we were to trade it down here or all the way down here, it actually then begins to open up this candle, but this candle hasn't given it up yet. See it? The 80% of this candle. So this could go straight up here, or we could mess around down here and even open up some like 680s. And I've shown you that before on here, give me a second here with this. I've shown you that before for like the merry month of May. When you're looking up at SPX Gamma, I've shown you, I had a big green box in here the other day. This is where the dip buyers are down here. And this is back testing trend. You see trend right here? So this is the old trend right here. And that's that yellow line right there. And what you're looking for is between now and, let's say, the second or third week of May. It could take into, believe it or not, into the end of May. But what you're basically looking for here is opportunities to get long for the merry month of May on trend with a clean back test over here and then up and away. We're out of there. And we're looking for these events over the next few days. Even if we continue to spike up. Let's say we get a good ERs, good ERs, or we get trapped in, right? We got a great ER. We're still trapped in, even if we get down up to the 720 with a little bit of call roll up here. I would still expect us to get sucked down in here, at least onto this daily trigger, if not underneath it briefly for a quick wick to the downside. So we're looking for this as an opportunity. I would be looking at from this point, this period forward into end of month, new month flows. And we know we've got pensions have I think 20 to 30 billion for sale, depending on who you're asking. I've heard like 20, 23, 25, 30. We also have CTAs that have for sale. And then you likely have traders. You also have the street. They don't want to come into a new month and be buying this right here. You know, they just won't participate in that. They'll wait until even if it goes up there, for it to come down to take that trade. If this is even in June, they'll wait. Or at least that's the perspective of the street. So let's go back over here. And this is not a good look. Just counting candles. I've got Elliott Wave. I've got us going up. On velocity, I've got us going down. On candles, I've got us going down. ICT, I've got us going down. So Elliott Wave, I think, might be the only one that I've got us going up on right now. I think, yeah. And the only other one I would say it's got us going up would be traditional charting. You could argue that we're still in this distribution right here, and that as long as we hold this, we can keep putting in new highs, even though it's a bear flag. It's potentially, you could say that's one or one right there, right there. You could say this is the first push up, so 1, 2, and 3. Traditional charting can say there's maybe one more high up here, just as a heads up. Let's go back to this right here. Yep. Let's go back to an hour. This stuff doesn't always show up. And let me just show you this right here really quick. We don't always do this, but if we get stuck in like sometimes we do a return to the OPEX pin, and the OPEX pin was at 7,000, and so it wouldn't be out of this world to think that you get the blast down over here, and you're still on the poop island. And you're around that 7,000 for that month end. That big net gamma down here. It's like an attractor into the end of the month. This doesn't seem irrational to come down here. And if there's any other stuff that can get us down there, we had some bad headlines this morning that were picked up by the tape. And the market's looking for those bad headlines right now, with volatility rising, with econ data, with month end, with new flow or new negative flows coming out for the end of the month, and with FOMC, and the fact that we're getting a new FOMC chair, and the new FOMC chair is purporting, even though he's leaving doors open for himself to not be pigeonholed, he is talking about the effects of inflation from Strait of Hormuz and the debt that we have out there. There's drum beats on this stuff right now. It's the time for there to be drum beats on it for where we are with price action. And we are close to a bond market blowout. I mean, we're not quite there yet, but in 1994 we had a bond market blowout on a 25 basis point hike. We went from 3 to 3.25, and the market fucking cratered. It took a couple weeks, but the market started selling, and then a couple weeks later, if you're pricing in that concept of that happening in June, maybe they price it in now, right? Even if you get a knee jerk on that rate hike, but you get a bond market blowout early, or maybe Jerome talks about it today, talks about wanting to give you a 25 basis point hike, or even if you don't get one, that hawkish tone could set the narrative for that bond market blowout in June. And I think that's his first. That would be if he gets confirmed, that would be his first chance to throw out a rate hike out there. And earlier in the stream on Twitch, I was talking about yesterday I was looking in where I live, and there's real we're in this weird place. Like, inflation can be very creepy. And you have to fight that inflation creep. But in this case, we have a unique, it's kind of unique, where we know what's coming. We know what's the train that's coming at us right now. And you would initially think that the Fed or Treasury Department or Fed Treasury, even executive potentially, could be combating this train that's coming at us. But we're in this kind of a unique situation with information today where everyone knows it's coming, and companies themselves are creating demand destruction. They're, for lack of a better way to say it, hold on here, for lack of a better way to put it, I was looking at flights yesterday. There's two things. Gas hit the highest in the country where I live yesterday, or the day before, in Michigan. I know gas is higher in California, but or that they're because of taxes, of course. But gas itself is at a high here in Michigan. I looked yesterday at some flights, and it was almost $400, $300 and something dollars to go to Chicago. That's 3 times normal for me. Flights. I also looked at other flights yesterday. They were $800 for a flight, and I went into some of the airline Discord or Reddit subs yesterday, and they were up in arms about it. They were very angry. These flyers, thinking that it was greed. It's not greed. It's intentional demand destruction, and a lot of these airlines will sell their fuel allotments. Like they'll sell this gas at a higher price, and they'll try to stop flights. Like, we don't actually want to fly people. If you want to fly, you need to have a reason to fly. This is not like a constriction that's natural. It's a constriction that is a real, true. We don't have enough, and when we don't have enough, we're not even going to be able to service the demand if we wanted to. So there's a manufactured demand destruction from corporations, believe it or not. So you might not need that 25 basis point hike if companies fight this themselves. It looks like that's what they're doing. It looks like they're being punitive in pricing because they don't want to fucking fly you, or they don't want to make it, or they can't, or they're not going to be able to even get the product that they want to get. There were prices yesterday for aluminum that were through the fucking roof, like through the roof. So if the markets, like, not like the stock market, but the business markets can facilitate demand destruction themselves, then you don't need the Fed to hike. Truth. And we're in this unique situation where we know why, where, how, and how bad it's going to be. And companies are already meeting that right now by saying, you know what, we'll just charge so much that they'll just say, no, I'm not going to do this. I'm not going to buy this. I'm not going to inflame this shortage that we have out there, because at some point I won't be able to get that at all, and there'll be no price to pay for it. So you do see some of that right now out there with companies, in particular airlines. And we see this too with farmers and ranchers. Farmers are foregoing planting, and then they're selling their fertilizer. They're putting their fertilizer back on to the market. So I'm able to pay my bills. I'm able to stay in business. I'm not bankrupt. And I'm going to sell my fertilizer. And I'm going to make money. I'm not going to go bankrupt. Everybody's afraid of bankruptcy. I don't think there is bankruptcies there. I think they're trying to prevent that. That like acceleration that will eventually put them out of business, where they can't keep up. So at any rate, let's look at the rest of this here. Let me put this thing back up again. Yeah, we're back on here. Just be aware of this down here. I've got the Hello Darkness, my old friend, and how do we get down here so we can buy a dip. There are lower targets down here, the 667, 684. I'm assuming this is 6,800 on SPX, in and around there. And so we're looking to see if we can get down here over the next few weeks. Is the greater point that I'm trying to make to you. Now, the thing you have to be afraid of here is one of the things you have to be afraid of here is the doom. You have to be afraid of anyone spewing doom right now, even myself, because we're already set to do this, and price action is saying we're going to do this. So you're going to hear like the worst of the worst, the worst of the worst from people. You're going to hear everybody tell you it's like, oh my God, worst thing ever is going to happen. Worst thing ever. It's horrible. When it's just, it's not like it kind of the news will be used for this, but it's already going to happen one way or another. Okay, it's more a function of options, believe it or not. Options and trading stank market. It really is. Put this over here. Put this back to a 1 minute really quick. This is all wonky. It's not correct. This thing goes right here, just like that. There's a 4-hour locking us in. These 4 white lines right here are unlocking keys to go lower. We don't necessarily have to go down there today, but if we can get down here and unlock that stuff, it opens the door to downside. So keep your eyes on these little white lines down here: 708.33, 709, 17, 708, 77, and 71, respectively. Let me put some of these time frames back on the chart here for you guys. They bought this one at 9 here. At 9:30, excuse me. More buyers came in to buy again here. At 10, this is nice. Like seeing that. 10:30 out on negative velocity. We also have a cross of the half an hour through the hourly trigger. I'm just thinking to myself, I almost had a meltdown. I almost had a moment where I was like, oh God, I hate my life. On FOMC day, biggest day of the month for us, and quarter sometimes. Biggest couple days of the quarter for us. Put that over there. Put this one right here. And we're going to give you a quick preview. We'll have the FOMC live here. The news squawker we'll have on as well in real time, no delay in news squawker. I'm going to give you a quick preview here in a few moments.
On track for the highest close since July of 2008. 20 and 30-year yields on track for the highest close since 1998.
I'm tighter and put some of more of these up so to mess with this stuff later. Sorry, I deleted a bunch of these earlier too. Let's go back over here. Also note that I did leave a chart in the Discord this morning before market open for that first down move for you guys, just to let you know that I'm not bearish here, but I would like to see more down from now into at least the first week of May if possible. Let's leave this here. Okay, so I'm going to just delete this one so we can watch the price action here. And we're going to chat about these days really quick here. So we're in what's called a binary event. These are opportunities for the market to go to move when it otherwise cannot move in another direction. Or I should say in any direction, not one direction, but any direction. This is also a day for traders with small accounts that are oftentimes new to trading to lose all their money, where their rules and tools get broken. We have these events frequently ish enough, but we've got like OPEX of expiration, month end. ERs will oftentimes present, white papers will present that stuff. Opportunities for binary events for the market to move. And today is one of those days. It's one of those days where older traders, what they'll do is they'll wait for the fallout. Even if it goes up, they don't care if it goes up or down. They're looking for the opportunity to trade the reaction.
By 10 billion euros.
Indubitably, and trade the reaction. So if we squeeze all the way up, they're looking to sell. If we blast all the way to the downside, looking to pick those up, pick that bloodbath up and move on. So I do warn you that on these FOMC days, that's 50-50. Don't ever be like, ah, Cap got it right, he's amazing, or Cap got it wrong, he's the worst, or your favorite furor out there. They didn't see this coming. These binary events, they're better left to trade or to happen, and then you come back later and trade them. Another problem with today is option interest. Dealers are already aware before we get to these binary events. They're already aware of degeneracy coupled with hedging flows. So you have options that are repriced throughout today, especially once we have the vol watershed moment. We usually get a vol watershed moment at 2:30 in the afternoon, and you'll see options get repriced multiple times until the end of the day. If risk comes off the market, you'll see you might be directionally right, but your options are wrong. So options are brutal. A brutal thing to trade on days like today. Sometimes you can get away with it, but you have to be really fast. Like if you're going long or short, with options, you have to have upside or downside stop. So if I'm going long with calls, an upside stop. If you miss that swing high and we swing back down and they reprice options, even when we go back up there, you might be losing money. I'm directionally right, but my options are worth way less right now. So that's a big part of these days as well. So just make sure if you're taking trades on an FOMC type of day, I'm always looking for a low or a high to sell or buy, one or the other, right? Some kind of a, oh my God, last minute break to the downside, right before we get into that, and then you can take that long. Or we rip higher and you're trying to sell into those people at the end of the day, something like that. So there's no reason for my point to you is if you have a small account, there's no reason for you to be out here gambling all day long. You see some guy out there going like me, I'm buying 100 zero-day calls, and that's 0.01% of my account, and you're like, well, I'm going to get 100 calls with you, and that's 90% of your account. This is not your day. You stay away from these days, and you never, ever, ever, ever hindsight trade these days, ever. These like hindsight trading binary events, one of the bad habits traders will pick up. So I went into the last two of FOMCs, or the last two unemployment or on employment day, like, and then it works for you, and then all of a sudden it doesn't. There's no edge is the point here. So just be careful of like hindsighting binary events that they'll be in your favor, especially when you miss out on the trade. You'll be like, oh, I just bought in calls, or if I just bought in puts, I would have made so much money. I'm going to try it again the next time. Does that make sense? And then you get scorched, and you say, oh, well, everything was the same last time. Why didn't I win? And it's because it's a binary event. Just keep it that simple. It's a binary event. Most traders don't trade them. Most traders that make money don't trade them. Most traders that don't trade them, even if they do trade them, you ask them, say, how much of your account is this? And it's going to be like a lottery ticket. They're going to honestly tell you, this is a lottery ticket, and I think it's going to burn. So just be aware of that as well on these days. I'm going to give you a preview here in just a few moments. I do have the new squawker on. I'm going to run through a preview with you for FOMC today. Before we even get into it, for today, I want to give you my take on this. The market is expecting no rate hike today. They are expecting, hold on here. There we go. They are expecting, the market is expecting no hike, but it is expecting a very hawkish tone from Jerome Powell. I don't know if it's as hawkish. I think it's more, or maybe it's as hawkish, but I think it's going to be more, I hope it's more in line with, we're monitoring this. This is a unique situation. We are already seeing demand destruction from the business cycle, from companies creating it, without the need yet for the Fed to intervene. But that if this doesn't work, they will intervene. Now, if they do intervene with, let's say, a rate hike, let's say the new Fed chair does that and throws another 25 BPS on there, we're at a place right now with QT. We're kind of flat right now, but we've come into trend on QT where there could be another potential bond market blowout if you've got the new Fed chair doing QT, throws another 25 basis point hike on there. There could be a bond crisis of some kind. And we might even want to price that in or potentially begin to price that in with Jerome today. So that before we ever get to it with the new Fed chair with Warsh, we've priced in most of that stuff, most of it, maybe not all of it. I think if you got a rate hike today, you would have that crisis. I think we would have a major meltdown in the market. It would probably take a couple weeks. You'd have the initial move down, and then a week or so from now, we would roll down even harder. It should take a week or two, or maybe 3. But I don't think you're going to get that as of today. And a case in point would be the airlines and farmers. These guys are like not just those guys, but a lot of different companies. They are not trying to be greedy with profit. They're trying to tell you, don't use this. That's what they're telling you. Do not use this. And if you really, really need to use it, you better have the money to use it. You know what I mean? That's how you create demand destruction. And say, you want to go fuck off in Miami. You want to go to your third tier, third rate convention. Maybe you don't need to go. Maybe someone else needs that gas more than you do, and will pay for it. So maybe like Bob in Des Moines, who wants to go down to the human resources convention this year. Maybe he can stay home and they can do a Google Meet with other HR directors for your mid-tier company. Whereas someone that's a CEO of a company or someone who makes a lot of money for a company or whatever, they will pay for that to be in person someplace. And I think we have to monitor this as time moves forward. And I think that'll be the general message from Jerome today as we're monitoring the situation. It seems like this is an unusual situation. It's not like inflation creep. Inflation creep is like where it's creeping up slowly and the Fed or the Treasury or the executive or whoever else, they can like throw warnings at the markets or do things to fight the inflation creep. This is not inflation creep. We know what's happening. We know it's coming down the pike. Market is aware of what's coming in. And businesses seem to be addressing this right now. It seems like that they are. So we'll talk about that too today. And it's also the last, or theoretically, this is the last federal open market committee meeting for Jerome as the chair. And that there's a small chance he could be the chair, believe it or not. No one's been approved from the Senate yet to be the next chair. I wouldn't put anything past Trump, anything at all past Trump. And you never know what comes out of a Senate hearing. It could be a completely different Fed chair at some point, but it could also be Jerome. And if the selection process.
Trump speaking to them saying, I will not lift the naval blockade without a deal that includes a nuclear program.
We're not even getting that. We're just stalling. We ain't going up there. Maybe we are, but we're going to stall here. I bet we stall right into, I don't want to give anybody any hope here. We're going down, in my view. But my takeaway from today is it's going to be hawkish. I hope that Jerome will say something calming to the markets, that businesses are looking good, trying to create this demand destruction without the help from the government to create it. And I think you should be looking at this from companies right now to say, we don't want you buying our shit. And I think the farmers are saying the same thing. I'm not going to plant. I'm going to sell my fertilizer for someone that needs it more than I do. I'm going to make my money off the sale of that fertilizer. and no, you can't have any tomatoes this year. You know, your local farm or whatever, your mid-sized farm. Sorry, you're gonna have to get them from a larger company that can absorb all this stuff to feed the masses, right? Rather than me just feeding you in my local region or whatever, because there is true shortage. There's no like creep on shortage. No, like creep on shortage would be like, how do I explain this better? I top line it like, I love tomatoes. So I can only afford 5 tomatoes a week. But I love them so much and they're so cheap that I'm going to now buy 10. Now I'm going to buy 15 tomatoes. And everybody else likes tomatoes too. And so now everybody's gorging themselves on tomatoes. And now there's not enough supply of tomatoes. So companies will raise prices because demand is there. In this case, that's slightly different.
With them today, that he intends to leave the naval blockade on Iran in place until the regime agrees to deal.
There's an artificial reason for why there are less tomatoes. I can't even provide the 15 that you want and this guy wants and that guy wants. And we're not even at 15 yet. We're at 5 tomatoes. So I have to impress upon you as a buyer of my tomatoes that I only have fucking 5. I got 5. And once I sell those 5 to you, I can't sell any more tomatoes. And I can't get more tomatoes. I can't get more seed. I can't get more tomato. I can't get more nothing to make a tomato. So there comes a point where I got to tell you, fuck off, right? And I think that that's where a lot of these companies are, where they won't even have access to it even if they could. And what are you going to do? Turn flights into a flight up the road for $3,000? No, you're just going to make them. You're going to make the price higher so you don't even offer it. Maybe you have one flight for people who need to take that flight to get that flight. So it's slightly different, right? It's not quite everybody likes tomatoes. It's more we can't even make them if we want to. Can't even grow them. We don't have them. We don't have access to them. So slightly different situation that we're in right now. Give me just one quick second here. I'm going to set up a preview for you. I'm going to read it off to you, show you some charts, hopefully, and we'll get prepared for today's FOMC. And I'll give you the good, the bad, and the ugly on this stuff. So right here, market / Fed cut odds to coin flip before 2027. There's some other stuff here too. You could get a brief hike, shock the market, and then we cut.
Put out that article on the feed for you to read through.
There's a lot of news stories right now saying we can't get cuts this year. I don't agree with that at all. And I also know that Warsh has not pigeonholed himself. He's been very slippery in what he says here with wanting QT and no more rate cuts, no more easing, that kind of stuff. The biggest thing that I don't like about Warsh is that he wants to become adversarial with the markets. I don't like that at all. I like the communication. I think it's been a better market since we've had that. He does not want to telegraph. He wants to get rid of guidance from the Fed, and I like that guidance. I think the more communication with markets, all markets, is better. But I think he's more a believer of the old school way of doing things. And I'm not really a fan of it personally, but we'll deal with that in the future. Market / Fed rate cut odds to coin flip before 2027. I think you're looking towards a rate hike right now, but the way the demand destruction is happening, it might do its job on its own without needing that hike. If you did get a hike right now, along with QT from the new Fed chair, we will have a bond crisis. It's pretty much like I'd say it's like a 90% chance that we'd have a bond crisis if that happened right around now. If you got a hike today, same thing. So as FOMC meets, markets are effectively pricing in a higher for longer regime, suggesting little confidence in near-term easing. I don't think you get any easing right now. We are nowhere near easing right now. None. Zero. If you got a cut today, it would blow my face off. If you got a cut today. What else we got here? Tight here. I'm gonna go over a few more things. I was gonna use Helium browser today, but didn't get around to it. Tighter, guys. Excuse me here. Oh, yeah. Hang tighter, guys. First, I'm going to read to you for the preview for today. Moments ago, Warsh won the backing of the Senate Banking Committee Wednesday in a 13-11 party line vote, putting him on track to be confirmed by the full Senate before Jerome Powell's term ends May 15th. Bloomberg just reported. Warsh's nomination had been held up by Republican Senator Tom Tillis until the Department of Justice agreed last week to drop for now. It's not going anywhere. It's political kabuki theater. A criminal probe into cost overruns in the renovation of the Fed's Washington headquarters. Tillis, who saw the probe as bogus and a threat to the Fed's independence, which it is, on monetary policy, said in an interview on NBC's Meet the Press that he received assurances the department wouldn't open the case unless the Fed's Inspector General, who is also reviewing the project, sends a criminal referral. As expected, Dems weren't won over. Elizabeth Warren warned that Trump is still intent on controlling the Fed. I agree with that statement. I'm not a fan of Warren's either. Hold on a second here. Warren warned that Trump is still intent on controlling the Fed. Democrats have also demanded an end to a legal pursuit of Fed Governor Lisa Cook. Quote, "The stink of stagflation is in the air," end quote, Warren said. She said confirmation of Warsh would help Trump dominate the Fed's monetary policy. Quote, "Trump has not been subtle about his takeover," she said. The vote makes real the prospect of a Warsh-led Fed that promises the biggest shakeup of the U.S. central bank in years, having raised the prospect of regime change. Now, we should probably, before I even go into the rest of this regime change, I was a little taken aback and scratching my head not really taken aback. I mean, I kind of expect it. Like, Warsh is like, regime change, we're going to do QT. And I'm like, wait a minute, we've just done a shit ton of QT, a fuck ton of it. What we're doing is we're spending alongside this QT. So what he's not saying is we want to enable more spending, and we're spending too much. The debt to GDP ratio is out of whack right now. When he says like regime change, we're going to go back into QT. We were just in QT, and we go into QT like right now, and we're going to have a bond market blowout, which I'm okay with it. But just note that if we continue with QT right now, and you get like rate hikes from Warsh or anything like that, it's going to be a mess. He also, when he was harping on that regime change, he left himself some outs. He was a proponent of QE1. He was not a proponent of QE2 or the extension of QE1. But he's been known to do QE, and he left himself outs on rates as well. Hold on here. Quick little dump here. No news headline on this. None that I can see. But of course, the stake sellers, they're going to get the regime change out there, right? Put the fear to you. It doesn't. A headline doesn't sell when you say, "Oh yeah, he's talking about regime change," but his verbiage and his speeches are leaving outs for himself to not do the regime change, or his regime change, like a headline like Warsh claims regime change, but he's more likely going to be like Powell, doesn't sell seats, does it? It doesn't sell. It doesn't sell. Read my story. The fear and doom is it sells newspapers, right? So, having raised the prospect of regime change as part of his bid to win Trump's nomination, Warsh has promised to shrink the Fed's $6.7 trillion balance sheet, establish a new framework for managing inflation, and change how the central bank communicates with the public. The biggest fear that I have is how the central bank communicates with the public. I got a problem with that. You should too. I don't think it matters if you're a bear or a bull. He doesn't want to communicate with you anymore, basically. He has, however, offered.
He did see a little bit of downside movement, very tiny, on the S&P 500. Again, very small. Same thing just coming through. And Axios just adding further detail that CENTCOM has prepared for short wave of strikes on Iran.
Mm-hmm. Hegseth, Pentagon will form a command for drone warfare. That's good. Trump from rejects Iran's offer.
CENTCOM has prepared for short wave of strikes on Iran. And seeing a tiny bit of movement towards the upside on the Dixie, very small, and a little bit of further downside movement on the SP 500. WTI seeing a little bit of further movement towards the upside. Again, quite small.
Good thing I removed that fucking upside move, right? We're going down. You can already tell it's like clear as day.
CENTCOM has prepared shortwave strikes on Iran.
Market's looking for a reason to sell right now. Any headline that's negative, they'll hit the tape, and that's it. It's on the tape.
And also from Axios that Trump would consider military action if Iran won't act.
Having raised the prospect of regime change as part of his bid to win Trump's nomination, Warsh has promised to shrink the Fed's $6.7 trillion balance sheet. He did leave himself an out on that as well. He wants to establish a new framework for managing inflation. I kind of like that new framework for managing inflation. And change how the central bank communicates with the public. That's the one thing I don't like. He has, however, offered few details on how he might pursue each of these goals. They do have some I think he's on the same page basically as Moran. There have been some white papers written about this stuff. Both of these guys have admitted that they do believe that there are dangers in this path forward that they want to take.
If Iran does not act.
Warsh is almost certain to face heavy pressure from.
See some downside movement on the S&P 500, a little bit more now. Dixie did see a little bit.
Trump's in puts right now.
And
he's like, oh yeah, he's like.
For the back of those, the Axios piece.
He's like, I'm gonna do some strikes. Hit my puts, bro. I'm watching Jim James. He's got these white lines down there. I got to open them up. Warsh is almost certain to face heavy pressure from Trump over monetary policy. In a CNBC interview on April 21st, the president said he'd be disappointed if Warsh didn't cut rates as soon as he took office. Meanwhile, Warsh has vowed to protect the Fed's independence. In his hearing last week, Warsh blamed the Fed for allowing inflation to surge during the COVID-19 pandemic. While he said high prices remain a problem for Americans, he also floated the idea of a new framework.
Voice news disconnected.
In his hearing last week, Warsh blamed the Fed for allowing inflation to surge following the COVID-19 pandemic. While he said high prices remain a problem for Americans, he also floated the idea of a new framework for dealing with persistent inflation, though didn't offer specifics. There are specifics out there. But even he himself and his ilk say that they cannot guarantee there won't be a bumpy road if they implement this. He also steered clear of committing to a near-term path. So steered clear for committing to a near-term path for interest rates and suggested Fed officials have made a habit of providing financial markets with too much guidance on where policy is headed. If you were to look back on setting the tone, setting the tone, we have examples of other Fed chairs that have made these same comments as him or similar, and they have come out and slammed the market with a rate hike just to set the tone. And Warsh seems to be one of those guys. So if you don't think that he would do something like that, we have plenty. We have at least three, including Powell, who has gone to their first Fed meeting and raised rates at that meeting. The combination of Warsh's calls for a smaller balance sheet, new ways to think about inflation, and communication changes put Warsh in the spotlight to explain how he'll defend the Fed's independence, said EY Parthian chief economist Gregory Dacko. Quote, taken together, this points to a more centralized, less transparent, and potentially more politically exposed policy framework, he said. Earlier, Warsh and his wife, Jane Lauder, reported assets worth at least $192 million in financial disclosures filed as part of his nomination, but his total net worth is likely much larger and makes him one of the wealthiest Fed officials in the central bank's history. Bloomberg has estimated his wife's net worth at $2.5 billion, many of which are market dependent. Democratic lawmakers called for more scrutiny of Warsh's assets, while Warsh has promised to quickly divest from certain funds for which he hasn't disclosed the underlying assets, citing confidentiality agreements. Still have not unlocked the first one at 7:09:17 by a tick. Now moving into the rest of the preview for the Fed today. And fascinatingly enough, too, I watched the last Fed meeting where Jerome discussed this exact thing we're going through right now. He actually discussed monitoring and the reason to monitor the markets for this coming this coming destruction from the Strait of Hormuz being closed. In its preview, or at its April meeting today at 2 p.m., the last for Jerome Powell, the Fed will remain firmly on hold. In its preview of what to expect, Bank of America economist Aditya Behave writes, hold on a second here, guys. Hang tight here, guys. In its preview of what to expect, B of A's economist Aditya Behave writes that the inflation outlook is arguably as cloudy as it was at the time of the March meeting. And even though equities are trading as though the Iran war is over, gas is still above $4. It's actually at $5. And traffic through the Strait of Hormuz is still highly disruptive. As a result, uncertainty about the impact of the conflict on core inflation remains elevated. Meanwhile, the recent labor data, March jobs ADP claims show resilience and potentially some green shoots. To Bank of America, this should reduce the sense of urgency to shore up the labor market amongst the doves. As a result of latent inflation threats, and I agree with that statement. I mean, if you can get everyone's employed right now, these shortages are abnormal. If corporations can create the demand destruction without the Fed doing it, thank you. Then you don't need the intervention from policymakers. As a result of the latent inflation threats, some of the most prominent doves on the committee have changed their tone of late. In a speech last week, Waller emphasized not only upside risks to inflation from the Iran war, but also the size of the labor supply shock, which means that very little or no net job creation is necessary to keep the U rate. Waller likely still wants to cut this year, but probably less than he previously did and later in the year. Like I honestly, I mean, I'll be honest with you guys right now. Like, if businesses can create the demand destruction, you're not going to need Waller to hike. If it doesn't get done, and let's say Waller steps in to move it along, or to add more demand destruction, and we get that demand destruction until the SOH is open and the air gaps in fuel and commodities are restored, I don't think for a minute that Warsh wouldn't come out and cut rates to trigger the market to go back higher again. Going on, Daly says, Daly went a step further, saying that if the policy were left unchanged all year, quote, that would be a good restraint on inflation. And remember, we're already at 3. We're already up above 3. So, we are in a restrictive environment already. Daly going on to say that, but not so restrictive to hurt the labor market. So saying that if policy were left unchanged all year, that would be a good restraint on inflation, but not so restrictive to hurt the labor market. She also noted that the Iran war is likely to affect inflation more than growth. Daly's base case is now a flat policy path for the year. Even Moran, the most dovish member of the FOMC, said that he was leaning towards 3 rather than 4 cuts this year because the mix of inflation has gotten worse since the start of the year, in his view. Based on recent Fed speak, the chart here, I'll post this for you guys. So this is the dot plot right here. Based on recent Fed speak, the chart below shows where Bank of America's Fed watchers think the 2026 dots would be if there were a dot plot at the April meeting. Although only Waller, Daly, and Moran dots have been shifted for now, the risk is that more dots will move up by June. Everyone who has spoken since the March meeting has sounded at least marginally more hawkish than before. I'll move that out of the way for you here now. The statement today that you should expect that risk is two-sided. The big question around FOMC is whether it will indicate that risks to the policy path are two-sided. One way to do this would be to change the reference to additional adjustments to the policy rate in the forward guidance language to any adjustments. So additional adjustments would be changed to any adjustments or simply adjustments. This would indicate that the next move wouldn't necessarily be in the same direction as the previous one. Per the minutes, some participants judged that there was a strong case for making such a change in the March statement. These hawks are likely to be just as vocal and possibly more emboldened by the labor data at the April meeting. So it's a close call, but the majority of the committee would prefer to leave the forward guidance language unchanged. There will likely be one change to the statement. Given the downward revisions to fourth quarter GDP and soft consumer spending in Jan-Feb, the Fed will choose to downgrade the description of economic activity from solid to moderate. That said, an argument to not make this change is that it would be a bit dovish at a time when most of the committee wants to guide markets in the opposite direction. And I agree with that statement too. I don't think that they should change the description from solid to moderate today. I think they should stay with solid as long as we're monitoring businesses create that demand destruction, and that the Fed can step in to create if they more of that demand destruction if needed. That said, an argument to not make the change is that it would be a bit dovish at a time when most of the committee wants to guide the markets in the opposite direction. And I think that's a key point here, like guide markets, right? Guide markets in the opposite direction. And you can see this in airlines right now. You can see it already happening everywhere. We are creating demand destruction, or at least business markets are creating that demand destruction. B of A expects only one dissent once again from Governor Moran in favor of a 25 basis point cut. The press conference. The strong case to sound hawkish. I would relate the presser today to your airlines. Your airlines are not trying to gouge you. Your airlines are trying to tell you, stop fucking flying. That's what they're telling you. You're going to start telling you, no, stop it. People that want aluminum foil, they're going to tell you, no, you're not getting aluminum foil. We don't even want you to buy it. Just leave it on the shelf. In what was most likely to be his last press conference, Powell will sound moderately hawkish. For one, the data flow and balance of risks support a more hawkish stance, as discussed above. For another, there is no reason to push back against market pricing of a flat policy path when uncertainty is so elevated. If the labor data deteriorates later this year, the Fed can easily make a dovish pivot, just as it did in 2024 and 2025. Powell's core message will be that the Fed is firmly on hold, and policy is well positioned to respond to the risks to both mandates. Powell will probably get asked about the forward guidance language, whether or not it changes, and the threshold for hikes. If he repeats that rate hikes are not the base case for the majority of the committee, markets will read that as dovish. If he sounds more open-minded to hikes, if he emphasizes the importance of finishing the job on inflation or the fact that inflation has overshot the target for 5 years, that would be hawkish. He is unlikely to provide quantitative thresholds for rate hikes. Regarding the war, Powell will note both the upside risks to inflation and the downside risks to the labor market and growth. But which way will he lean? If he comments mirror those of Daly above, markets would read that as very hawkish. Powell could get asked about the pickup in labor data. He'll probably caution against overreacting to a few data points and state that the broad labor data has been soft but stable. A dovish response would note the wage inflation has been weakening. It's actually going up. That's false. She got that wrong. Whoever that was, that person, they got it wrong. Actually, let me read this to you again here. A dovish response would note that wage inflation has been weakening. It actually has not. It's been getting better. A more hawkish answer would lean into downside risks to the U rate, even if they are mostly due to slowing labor supply. As of right now, I don't know if they have to go that deep. Like if you're still working and can still pay your bills, if most people are employed and they can pay their bills and they can say, I'm not going to take a flight, as an example. I'm not going to fly. And you have the demand destruction taking place. Excuse me here. Just give me one quick second here. I'm going to lose my voice here. Just give me one quick second. I have some cough drops. I'm dying over here. Oh yeah. Oh yeah. That feels so good. Woo. Sorry. I'll show you that wage data here in just a minute, guys. Powell could get asked about the pickup in labor data. He'll probably caution against overreacting to a few data points and state that the broad labor data has been soft but stable. A dovish response would note that wage inflation has been weakening. That's false. A more hawkish answer would lean into downside risks to the unemployment rate, even if they're mostly due to slowing labor supply. They could always deal with that. Like if the labor rate changes or deteriorates, they can deal with that. As of right now, labor market is in a good position right now to handle all of this demand destruction and this inflation we have coming down the pike. We have not lost jobs. Here, let me get this wage stuff for you here, just to show you this. Surprised you got that wrong. It feels good. I got my my DS lozenges in right now. On the balance sheet, Powell could note that there is room for reduction in response to liquidity deregulation, but that a large majority of the committee wants to stay in an ample reserve regime. It is unlikely that it'll take a strong stand on Warsh's statement that the Fed shouldn't own long-dated treasuries. Finally, Powell might get asked whether he has decided how long he will stay on at the Fed as governor. He will likely respond that he doesn't have anything to add to his comments from the March press conference. Think tighter, guys. Yeah, average hour earnings rose. Average hourly earnings rose by 3.5% year over year in March. It's the slowest growth since the distortions of the pandemic. This would still be solid growth and is at the peak before the pandemic. But inflation is rising and is now a risk that a wage growth might slow further while inflation accelerates. And workers would then fall behind inflation. this slowing but still solid wage growth shows the impact of both dynamics that pull in in opposite directions. So you would at some point see wages need to follow this inflation path if we begin to see higher inflation. But as of right now, it's keeping up just fine. Excuse me. Yeah, I thought it was keeping up just fine too. It's keeping up just fine. Of course, it wouldn't keep up if inflation began to rage due to the Strait of Hormuz. We don't want to see that, right? And corporations don't want to see that either. I'll read one more point to you here. I'm going to read this to you now. This is the last part of the preview for today. The FOMC is expected to reiterate its wait-and-see approach this week, leaving the funds rate unchanged with a strong consensus and likely only one dissent, Moran. The post-meeting statement should leave forward guidance unchanged while acknowledging better recent labor market data and higher inflation, noting that inflation remains elevated as the Iran war continues to cloud the economic outlook. Sorry about that. Noting that inflation remains elevated as the Iran war continues to cloud the economic outlook. The path under Warsh, with the DOJ dropping its investigation into Chair Powell, the path is clear for Kevin Warsh's Senate confirmation. While the bond market has interpreted the transition as mildly dovish for policy later this year, GIR is less confident in that view. Warsh and Powell have historically shared similar views on inflation and interest rate policy, and a new chair may have limited influence in pressing for cuts within a divided FOMC. Fed funds rate and inflation outlook. Most banks expect both headline and core PCE to exceed 3% in the upcoming March data, prompting an upward revision to the Fed's inflation forecasts due to higher oil prices. Despite this, Goldman's probability-weighted Fed forecast remains more dovish than market pricing, maintaining the expectation for 225 basis point rate cuts in September and December. A newly introduced composite indicator tracking wage pressures and inflation breadth currently remains subdued, suggesting rate hikes are quite unlikely. I agree. I don't think you get a rate hike today. I think that right now you're seeing, if I was in the Fed and I was looking at the demand destruction, this is a good sign to begin with. I think that the Fed is here to monitor still. And you also leave the rate hike if needed. If we can't get that demand destruction between now and when if Warsh is confirmed, it would give him the opportunity to step in and slam that card down. If you can't fight it in these other markets, I'll fight it myself through the bond market and the stock market. Well, I should say short end and long end. Fed funds rates and inflation outlook. Most banks expect both headline and core PCE to exceed 3% in the upcoming March data. Blah, 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 blah. Two cuts later in the year. Below, we share various views from across Goldman's trading desk for insight in how to trade the FOMC rate decision. Get your pencils out. On rates, Brian Bingham from Short Macro Trading is saying we expect an unchanged statement characterizing Iran-related risks as uncertain, with no hawkish shift on inflation language. Powell should reiterate his March tone, defiantly hawkish, downplaying the SEP forecasts and downside risks, but with only 50 BP or 5 BPS priced through December, the bar for a further sell-off that prices meaningful hike probability is prohibitively high. I'll read that to you again. This is the important part. With only 5 BPS priced through December, the bar for a further sell-off that prices meaningfully hike probability is prohibitively high. The front end consensus reflects a Goldilocks path into the June SEP. The SOH reopens quickly with oil retracing towards $80 a barrel. Warsh clears his congressional nomination and votes in June. And subdued payroll growth forestalls labor market reacceleration. Deviations from this baseline uniformly skew towards higher rates, fewer cuts, and flatter curves, varying only in degree. We favor expressions most insulated from near-term noise ahead of June. On a terminal basis, we weight AI-driven displacement risks well above upside inflation risks. December-January FOMC flatteners offer a low VAR terminal value play, and we view persistent slope in the 530 type structures as inconsistent with terminal rate pricing in reds. December B of C is our preferred long, pricing 40 BPS of hikes alongside global peers. Yet unique as the only currency where on-hold policy remains modal outcome. Aram and Jane and Mitchell Cornell from Volex Trading saying, looking ahead to FOMC, we expect it to be a non-event. I agree. In a consensus on hold, and Powell reiterating the wait-and-see approach to how the conflict in Iran will impact inflation. Labor market data has been strong in the U.S., but I think balance of risks are still skewed towards labor market weakness, and the bar to hike remains somewhat elevated. There will likely be demand for convexity as we break out of this local range. The curve move has been relatively tame, perhaps reflecting cleaner positioning into what's being perceived as an inflationary shock. It was notable how low rate gamma got over the past week, reflecting the lack of delivered vol and swaps, and to some degree in futures as TY chopped around the 111 range. Skew will likely steepen for payers on this. Into this move, left versus right normalized a good amount. So we could see people taking profit there or adding additional bear flattener trades. We're in an unknown state until there's resolution on traffic through the strait and stability in energy. Until then, the world is at the mercy of those trying to negotiate a deal. Let's bring this over here. I'm just parked here sideways. On FX, Carly Lotta, G10 FX1 trading. It is our traders' view that there is an expectation for the Fed to lean slightly hawkish, and note that we could see a bit of a U.S. dollar bid on that. That said, that the desk struggles to see this really move the needle. Earnings after the close could have a bigger impact on risk. Overall, the market remains focused on Iran. Further, we have month-end noise. I'm kind of with this. I'm with this a lot right now. And I agree with this. I don't think we can get down, I don't think we're getting down below 6,800. I think that's like a beg. Like the ask is 6,900. Can we get, can we get to 7,000? Can we get to 6,900, 6,800? And we have noise around this right now. So, we have the noise of FOMC, we got the noise of economic data, we've got the noise of month end, we've got the noise of pension selling, we've got the noise of CTAs wanting to be sellers to be lower. So we're kind of begging to go lower. So even if you get the ramp on the U.S. dollar today, and the blood to the downside, it how deep does it go? Everyone wants that big second crash, right? I don't know if we can get that right now. I'll read this to you again. This Carly Latta person. I'm kind of this is my general gist here for myself too. That it says that our traders view that there's an expectation for the Fed to lean slightly hawkish. And note that we could see a bit of a U.S. dollar bid on that. That said, the desk struggles to see this really move the needle. And they're talking lower than 68, 6,900. Earnings after the close could have a bigger impact on risk. So, we're not down low enough. You get great earnings on these tech companies. We spike up higher again. We're like slapping those highs again on these after the bell earnings. And then you've got the risk from earnings is that they take the money and run up there, right? We're not really breaking out out to 7,300 or anything. Further, we have month-end noise. All that to say it is unlikely that the Fed leads to a sustained move in the U.S. dollar this week. The desk's preference is to sell U.S. dollars on any rallies and would look to do that over Fed if we do get a move. And that translates to, hey, where's the, where are we buying a dip? So when you come over here and you're sitting here and you're going, well, what are we looking at? What are we looking for down here? We're all sitting down here. We're all like, do whatever you need to do. Whatever bullshit you need to get us down here so that we can buy a dip. Right? So if you see spikes in the dollar and you see equities down, I don't think it's going to be like, oh my God, big red bar. Oh my God, whole world's over. I don't think this is that place. It's going to take more than what this Fed. I mean, this Fed meeting could be the start of it, but you get the Fed meeting, you get some bad econ data, you get a little bit of sprinkle of this, a little bit of sprinkle of that with pensions and CTAs. Before you know it, we're buying a dip. Let's go back over here. The desk's preference is to sell U.S. dollars on any rallies and would look to do that over Fed if we do get a move. Lexi Cantor from FX Research. Our econ expects to see the FOMC reiterate its wait-and-see messages as the war with Iran continues to cloud the economic outlook and present risks to both inflation and activity. They expect a strong consensus to stay on hold for now with only one dissent, as in March. While reaction function uncertainty is high, the team thinks that the combination of little policy action and a muddied FX rates relationship argue for a lower vol set to policy events for FX markets this week. In terms of directional bias for upcoming meetings, we note that our economists' model policy rate views have less of a tightening bias than in current market pricing across the G10. Part of this reflects the more global aspects of inflation and the central bank hike premium currently as they relate to the risks to energy prices. And any reduction in these premia on normalization energy flows would likely to affect rate differentials less than they would affect the outright level of rates, likely dampening any implications in the FX market. On equities, here we go. This is for most of us, right? Most retailers. Vicky Chang from Macro Research. We expect the Fed to leave the Fed funds rate unchanged at this meeting. The interest rate outlook continues to hinge more on how the balance of growth and inflation risks evolves. So the Fed is likely to maintain its wait-and-see message. While we are biased to look at front-end rates markets from the long side, the opportunities offer less asymmetry than they did. More pronounced policy or energy relief would open up scope for further rate relief. But if energy risks escalate sharply again, rates and rate-sensitive assets are more vulnerable now than they were now that the market has unwound some of the more hawkish policy shock it had priced. The risk to equities from the upcoming FOMC meeting is if Chair Powell strikes a more cautious note about the inflation risks from the commodity spike. With risk assets largely looking through the impact of the conflict, we think the downside tail is now underpriced. We think maintaining and potentially increasing tail is now underpriced. We think maintaining and potentially increasing shorter dated, deeper downside hedges makes sense against selective long risk positioning. Though the key risks continue to be from the Iran conflict, the mega cap earnings this week, not from the data or the Fed. Robert Blank, index derivatives trading. In equities world, you could be forgiven if you didn't realize there was a Fed meeting this week. This week's Fed meeting is mostly being treated as a non-event as the DOJ has turned away from investigating Powell, and we will get no dots this meeting. The focus seems to really be on earnings this week as semis have ripped and software has gotten crushed for most of this year. To put this into context of volatility, the implied move on Wednesday, the Fed meeting, is roughly 77 BPS, while the implied move for Thursday, by the way, I'll show you where the implied move is right now. Let's interject here.
Continue to trend of 12.
The implied move is right where I have us going. I want to show you that, or roughly where I have us going, just so you can see where the implied move is. This is where the yellow line is right here. 1 sigma move on end of day today is right here. 704.34. We start getting into a 2 sigma move down here. So you blast down here, you kind of like fight all this kind of nonsense to get up here. But just a note that we do have the downside target for you in the expectations that I posted for you in the Discord this morning before market open. Oh, my throat, dude. Whew, so much better. It is on fire. Pound it, baby. There's the door open to downside right there. There's one. Ping. We just need to open up the next of these 3 right here. There's one. So shorter dated, deeper downside hedges make sense against selective long risk positions, though the key risks continue to be from the Iran conflict and mega cap earnings this week, not from data or the Fed. Robert Blank, index derivatives trading. In equities, could be forgiven if you didn't realize there was a Fed meeting this week. This week's Fed meeting is mostly being treated as a non-event as the DOJ has turned away, blah, 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 blah. The focus seems to be really on earnings this week as semis have ripped and software has gotten crushed for most of this year. To put this in context of volatility, the implied move for Wednesday is roughly 77 BPS, while the implied move for Thursday, which gets all the earnings post-close, is roughly 1.15%. After another vol crush today, the desk thinks that short-dated vol, the 1-month space in S&P 500, is at a low enough level to work in either direction and should hold firm up to and through the Fed meeting on Wednesday ahead of the earnings after the close. On credit, Eric Wu, macro credit index trading, with risk assets having broadly found a ceasefire-induced elevator back to the tights in April and holding there despite the steady retracement in yields, the setup for this FOMC decision in credit is a murky one. On one hand, the technicals remained as strong as they did throughout the volatility of the past month, with asset managers generally still looking for risk into heavy primary supply, caught between equity and bonds. The U.S. market macro credit widgets have traded in a tight spread range since April 7th, with very little beta to the upside, even as SPX makes fresh generational highs, on account of, 1, continued European credit weakness as the specter of another energy crisis looms, 2, Still elevated implied vols and flat index curves with fresh hedging demand across channels. The 30-year IG cash TRS has been particularly popular. And 3, muted CTA re-risking as compared to equities, with a much smaller momentum impulse and hence much smaller agenda to clear in market from model-driven accounts. For the bears, we like positively convex hedges in CDX curves. And for the bulls, we like short vol, short spot expressions to play for premium collection. Plus continued normalization in implied vols in a world where risk continues to grind as tail risk premia dissipates. So that's all what I have today for the expectations into this FOMC meeting. So no surprises today to be expected from the Fed, and of course we're still bleeding to the downside today. Unrealized volatility. Hmm. Let's make this one here yellow. Spoo's trying to hold its pants up right now. One quick second here, guys. That hasn't shown anything to me. Hang tight here, guys. I got to do we're gonna look at some gamma here. let's take a look at we're on our website right now. We're going to go to Gamma Viz. We're going to freeze a screenshot of the actual Gamma current. We use real-time data for our Gamma, no delayed Gamma or delayed data. Let's take a quick peek at this right here. Market's currently trading right about here. Right in here right now. This is right where we are. On net Gamma. There are some lower call strikes below, but indubitably this is basically where the Gamma flip is. Max pain 7,000. There's almost like a magnet to this for month end. Not a huge magnet, not like OpEx, but there is somewhat of a magnet down here into month end. On net, or on zero date, excuse me. Here are where we are on zero dates. We'll look at for the rest of the week here for Wednesday, Thursday, Friday. We have a pin, max pain pin on 7,100 today. Where are we trading right now? 7,119. So we're slightly above, right about here. We're right about here right now. There's also this upper strike up here, 7,140. If you're of a bullish flavor, and if you see at any point, let's say the market blasts down to 7,100 and trade the 7,140, just keep this on your radar for today. The range is, as of right now, roughly 7,000, 7,140. If you go to one dates for tomorrow, a whole range of outcomes. We've got 6,900 down below here. We have another big target above at 7,150. There's also another prominent pin here at 7,055 for tomorrow. You want to see this? You want to snip this for at home? You can. 2 dates. This is into Friday. This is where we begin to get some of this unwinding potential. So Thursday is the 30th, but look at this over here. Like, we have a huge target up here. This is a wall too. It's not really a target; it's more like a wall. I should be more clear in that. But there is some potential to unwind and blast up here. There is one noteworthy thing. We want to check this this data when we come into the new month and see if this wall is even larger or if it's come down at all.
You're in oil minister being cited.
But there's 7,200 for 2 dates.
Concerns about securing and
3 date.
fuel.
3 date data. 7,200 is coming down as of right now. There's a big support or wall here at 7,090. You can see up here just this gamma versus underlying as we come into 720, they want to sell. NetGex has us at 7,100 for put side, and then 7,100 for call side. VIX is at 7,000. The NetVex down here, which I like anything underneath 7,000. Anything at like 7,000, 690, 680. Let's look at this expiration here. $2.43 billion in expiry to give a little bit of Vanna to the end of the month. A little Vanna bump. So not bearish. Any downside moves, if we can get down there at all, should be a steal. Should be a steal. Any of these unclenches to downside, market very supportive right now. And that's the daily trigger for you if you can't read like doggone it. That would mean that doggone it, if you didn't understand anything that I said today, it's basically saying that the daily trigger is fairly strong here. And it also has the weekly trigger close by underneath. There's not a lot of stretch right now on the daily and weekly trigger, so if we can find an event to get us deeper or lower for even a brief moment, you want to take that opportunity to buy the dip. Yeah, I'm fairly bearish here. I mean, I'm bearish. I think, or not bearish. I'm not bearish. I shouldn't say I'm bearish. I should say that I'm bearish for a dip to buy. I'm a greedy bull. I'm cheap. Where is the pro channel? There's pro channel. There we go. Sorry, I was in some discussion this morning with my technical defects. I was out of the pro channel. I'm back in it again. That's really weird too. My hold on, guys. I gotta cycle through this really quick and see. I'm having some chat issues here. Hold on here. I gotta go to the. I gotta do this. You're gonna hear some music here. Maybe mute your camera at home really quick. I mean your microphone. Oh, your speakers. That's okay. That's okay. That's okay there. I don't see where I'm missing I don't know why I'm missing the chat here. Having chat issues too today. I want to take this trade right here badly. I want to take a squeeze here. I just don't know if it's going to be stall. If it's going to stall, like the idea of taking a long here, even if we get drubbing down here. Couple seconds here, guys. So much red and yellow today. Oh shit, what's going on? Give me a second. I got to set up a few things here, guys. I think we took that one out right there. I think we took out most of that one there. Let me do some work here in the background. I just want to mark some dip buying opportunities here. All right, I got my spot here. News Squawker is on. Let me just a minute here, guys. I got to set some stuff up here for this this press conference. Oh, blah 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 blah. So, right there. I'm gonna stay with the. We're doing this other wonky thing. I've got the Fed set up right now, but we're still doing this like wonky. We're still doing kind of a wonky Fed thing over here. They changed how they were streaming. There's a live video feed right now of the FOMC, but it's not on YouTube right now. Jesus Christ, INTC up another 10%. Woo. Qualcomm up 3%. Woo. SNDK up 7%. And the secondary guys got a few more things they got to do. Sen 150 is now yellow. 7200 is red. Big fat fucking wall. 6170. They rolled their calls already, so they're good. They're out. So those calls are gone. 7150 is now the major wall. Little wall is 7100. So 7130 doesn't mean shit anymore. 7100 is support and gamma flip. 6900, 7069, 70. Yeah, I got that right. Those are our targets below. We're basically sitting on support right now. Anything under this is there's no support under this. It's party time to downside underneath this level right here. If you're a bull and you don't believe that we can go down anymore today, this is your level right where we are right now. A little bit more down. It could be a little bit more down.
Brent crude rising above 119.
We're trading 71.17.
The first time since June of 2020.
If we trade 7,100, and you're like, cap's crazy, there's no way we go down at all today. We're fairly close, like right in here. I don't like buying this personally. I think we go down deeper. VIX 9-day is parked on 1835 right now. Looking for a breakout. Watch 1947 on VIX 9-day. If there's a rejection off of it, we get a vol watershed off of that number, that'd be good. If we don't, though, we're going to moon. We could trade 24.5. 25.5. If we break above 1947, we'll trade 25.5. It'll be a mess. Let me just see where these sellers are on VIX. You know, the sellers are at like 25, 25.5. Somewhere in there. One quick second here, guys. No. If there's any issues or anything like that need fixed or whatever. We get PCE tomorrow at 8:30 in the morning. There will be inflation data in that PCE. That core will have it. And they already know the numbers. We get a 30-year tomorrow at 12 p.m. too. That's mortgage rate, not One's NFP. The 8th is NFP.
So Israel's Channel 12 on Trump says that he asked Israel's PM Netanyahu to operate in Lebanon with greater caution and to avoid demolishing buildings, as that harms Israel's image. So again, it's coming from Israel's Channel 12 being cited by Al Jazeera.
Give me a second here, guys. Yeah, Meta's in the same place as Microsoft. Huh? What about school? What's up? I saw someone ask about Netflix, like why is Netflix down? Netflix is down because they already had their earnings. They had their earnings. They hit the upside targets for their options. Now they're hitting the downside targets. That's why. Like that's why. All that money is now looking elsewhere at the next reports coming out. You want a place to buy Netflix? It's probably, it's right kind of right where we are. I might like 85.41's kind of nice too. I've got 82.19 with an alert on it. It's parked right now on its monthly trigger. What's up, Canada Fett? You want to see some? You want to go through some of this? Here, I'll go through some of it right now. No, we'll keep that one up there. Let's go. Let's bring up Microsoft. We have some time. It's only 1:19. We got a little bit of time. We can fire through these if you want. You want to fire through these real quick? We can. So I did this the other day for Microsoft Gang. So after the bell today, we are reporting Microsoft, Amazon, Meta, Alphabet, Ford, Qualcomm, Chipotle, Kinross, Brookfield, and KLA. Tomorrow morning, we get ConocoPhillips, Caterpillar, Valero, Wayfair, Lilly, MasterCard, Altria, Merck, excuse me, Bristol Myers Squibb, and Cigna.
Against assassinations on Trump. Putin and Trump discussed Iran, says the Putin-Trump.
Voice news disconnected.
And then on Thursday, after the bell, we get Apple, SanDisk, Reddit, Rivian, Amgen, a few others. And then on Friday, a bunch of other crap. But for right now, I want to show you this Microsoft because what you could see here is, or if you're looking to trade Microsoft on the bell, like any kind of like dumps down here on FOMC should be bought up to go higher. If you want to look at just this right here, Microsoft probably has the best velocity right now. It might have changed since a few days ago. We can look at it right now if you want to for earnings. Let's look at this. This is looking fairly bearish. Oh no, let's go to a 30-minute really quick. Yeah, it's looking fairly bearish here on an hourly basis, but the daily looks very supportive. So just noteworthy that Microsoft into their earnings is slightly bearish on a short-term period. This is Microsoft. This is Amazon. It's the same track. I'm not going to chart this for you because it's the exact same track. I chart this for our members, so they have this already, but you can see that like Microsoft has a little bit more room to run. This doesn't mean that Amazon doesn't have the room to run, just that it's a little longer in the tooth on daily velocity than the hourly velocity. On Meta, okay, so on Meta, we've got this going up, down here, right? Smashing, right? And then up. This is Meta. But also on Meta, if we get any kind of like shanking into the close here today, to check that cross before trading up. I've got Meta going up as well. On Ford, this is Ford, by the way. I would like to see Ford not unclench until after the month end, so slam down here and then make their way up and away. higher, of course. Maybe clean this out right here. Maybe not that right there. And then up here, Ford potentially could tag this. Looks like they've got some kind of a 1, 2, 3. So maybe you get the 5th on this, but in both scenarios, I still like this coming back down. I like buying here or here. So pick your poison on Ford. It's made 1, 2, 3, right? The 4, 5, or the 5 is never. It's a low probability. It's like 30% chance. And even if you hit it, it's still going to come in and correct down here. So you can buy it again in some relative safety. I'd prefer to buy it here or here. On QCOM, this is QCOM. I talked about this on Monday for a special brief. I did a video brief, private brief for the members. This is the buy zone down here. They're buying it right here. I like this up move here, Qualcomm. I love this after the bell as well. There is a note here that if Qualcomm rips, if Qualcomm ends up ripping up here, just watch this daily trigger as it comes up. It'll end up coming right back down again. I do like Qualcomm after the bell to moon. CMG. On CMG, we had a target here. We had a target on CMG up here. We have the weekly above. I kind of like the whipsaw on CMG, like down and then the breakout. So maybe a quick rip to the downside at $30 to backtest it. I'm a little bullish on CMG as well. If we can come down here, I'd like to see it go higher. The one problem I have with CMG right now is that it is in a bear market. If you see this monthly trigger, I would really like to see it above this before getting too bulled up on it. On CMG, someone who asked about Netflix. Somebody asked about Netflix. So Netflix had their ER already. So you got here's their ER, right? Nice little ramp up into it, right? Party time. Come back down here, print all the put side. And then I would expect an unclench after the end of the month on Netflix. So hold on here. So just after May, we'll call it the 8th or something like this. You might get a nice little rip, like all boats rise, and then something like this. You might catch something off of the rest of these earnings, and then down, and then up, and we're out of here. So 1, 2, and 3, and then we're out of here. Now, this is Netflix, by the way. And I'd just like to see it from wherever the smart money is down here. There's somewhere down in here, so the smart money probably sweep back in, put the screws to you down here, and then they let you up and away on Netflix. You know what Netflix might be good for? If you're whoever the Netflix trader that was asking about Netflix out there, keep an eye on them for 0-date Friday. They might do really well on 0-date calls for the end of month, or even like maybe don't start a 0-date, but start a trade tomorrow long that's got more time on it, so you can get that rip up into next month. If you structure it right, it probably print either way, even if it's just a call spread. In case you experience any more down on Netflix, so that you'll eventually be right. Oh, I just had a flicker. $13.27, just waiting another half an hour until we get this rate decision from the Fed. Oh, you were calling me? Sorry, my phone didn't ring, bro. I don't know why my phone didn't ring just then. It should have rang and it didn't ring. Sorry, doggone it. I love you, brother. Sometimes signal, sometimes signal, like, I get alerts and sometimes I don't. for the rest of you. I'm going to get rid of this one here just so we can see the price action. Give me one quick second here. I need a quick break. I got to call somebody really quick. And I'm going to put the news squawker back on. I'm going to put the news squawker back on if you didn't hear that.
So just to keep users updated, we are half an hour away now from the top of the hour, where we get the US interest rate decision, where both market pricing and median analyst estimates see the Fed leaving rates unchanged at 3.75% at this meeting. Also worth noting, this is slated to be, if all goes to schedule, Powell's last FOMC meeting as chairman of the Federal Reserve. So going into this, we're going to look at a note from Deutsche Bank, where they note that the Fed is expected to keep rates remained unchanged at this meeting, with policy still seen as positioned to deal with risks to the outlook. The main focus will be on whether the statement or Powell's press conference starts to sound more balanced on the risks, though the base case is still that any more meaningful shift in guidance waits until June. The risk for markets is that the communication leans a bit more hawkish before then. Deutsche Bank note that the only limited changes are expected in the statement, with recent data still fitting the Fed's view of solid growth, low job gains, and little change in unemployment, and somewhat elevated inflation. They note that Powell is likely to focus on the Middle East conflict and stress that uncertainty remains high, while also warning that the longer oil prices stay elevated, the greater the risk that inflation pressures become more persistent. OPEC Plus likely to agree to an oil output quota hike at their Sunday meeting without the UAE, according to sources. So OPEC Plus are likely to hike quotas by 206,000 barrels per day, minus the UAE share of 18,000 barrels per day. Again, according to sources, did lead to a little bit of weakness in WTI crude there, as again, OPEC are likely to agree to an oil output quota hike at their Sunday meeting without the UAE.
And I'm coming right back here, guys.
Washington Post reporting that the Pentagon is going to send the Ford carrier home from the Middle East. A little bit of a strength in the S&P 500, a weakness in the dollar and WTI, as again, Washington Post citing the Pentagon as going to send the Ford carrier home from the Middle East.
I drew it. But I think it comes back down though. What I think happens is
Post is citing multiple U.S. officials on the Ford carrier return.
I think we blast up here, but I think it gets reined in and gets sucked back down once we get into the hawkish commentary. That's why I'm not trading it. It's the only reason I'm not trading it right now. I think we get down there. So I don't like the trade.
Looking into the article then, the aircraft carrier USS Gerald R. Ford will depart the Middle East and begin to sail for home in the coming days. That's according to multiple US officials. An expected relief for roughly 4.
I'm going to change this right here really quick.
Have been deployed for 10 months, but a loss of a significant firepower as peace talks between the US and Iran stagnate.
Voice news disconnected.
Okay, so what you're going to expect here is you're going to expect this news squawker is going to drop the highlights of the press release from the FOMC. We'll go through that press release. It's going to say no hike, no hike, no hike. You should see a quick spike up on that. And the issues don't come into play at that point. What happens is you get the negative verbiage from the presser, and then you end up getting the negative Jerome Powell. And then we go down here, and then I think so we'll watch this closely. Here are all of your stop points up here. Here's your 1 and 4 hour right here. And as soon as we get this news drop right now, in the next 9 minutes, we're gonna get this news drop. Then we'll shift gears, and I'll put on a video for you of the live feed of Jerome Powell.
That policy is well positioned to wait for more data, while highlighting that the added uncertainty from the Iran conflict.
You could buy this. You could buy this right here if you want to. I just don't like the idea of you're long here and then it's like whipsaw down, or I think it's very dangerous up here. So it's just too much traffic up here for me.
Previous headline, we have posted the Washington.
The other issue here too is what I said to you earlier, which is the repricing of options in that vol watershed. Your options are losing value as it's going up, like literally. So just be aware of that as we move forward here. There's a lot of ways to lose your money in here, even though we're going up. Upside stops would be nice if you're long already. Or raise your stops from a bottom as we go higher in case it trips your stops. One or the other. Or be able to hand sell with a market order. When by. I fucking drew it. It's right there. Hold on here. Well, that's why I didn't have that up there. Hold on here. It's the wrong black screen. There we go. Let me put that up right here for us so we can watch it. Trump is actually live right now. I will put him on until 1 minute before 2 p.m. He's not going to be on. It says he's live right now, but I don't see him right now. He's trying to fucking take the rain. He's trying to take viewers away from the presser. He's such a douche. He's such like a he's such a fucking douche. So he wants to be speaking while Jerome is giving a presser. Such a fucking asshole. It's kind of like Comey being arrested. That's never going anywhere either. It's just to like aggravate. It's the same as Jerome going to prison for cost overruns. Just more noise, more bullshit tweets, Truth Social posts and stuff. Let me tell you guys something. Like 2 people went to prison for 2000. One person went to prison for 2008 financial crisis. Don't be looking at the fucking Fed chair going to prison. It ain't happening.
From Deutsche Bank chief economist
It's not happening.
that the Fed could adopt a more balanced language.
I think you might get a little bump today too, because they have to maintain the tone of hawkishness, but if he says anything like
changed at 3.75%, for Powell's
the demand destruction looks fine right now, then
so keep in mind also at the top of the hour, Trump is due to be meeting with the Artemis
check
at the White House as well. So we've got the video for that. It's on the feed for those interested.
I got it on right now in the background. If he pops on and like Jerome's speaking, I'll cut him off. But if he comes on and starts blabbing while the rate decision is being dropped, I'm going to mute him. Maybe I should keep it right here. Yeah, right there. Keep it right here. You're late. I don't know if you're late. You could probably get long right now if you want to. My only concern with you getting long here is just have like an upside target. Like, I'm in for $1. I'm getting out at $1.50 or something. Take your money and go home. You know what I mean by that? There's a lot of traffic up here. There's also repricing of options. That could be an issue too. I think we ran into this the last FOMC, where you're making money and then all of a sudden you're not making money as we're going up. And then we ended up rolling to the downside of the close, I think. But and you remember too, you got to remember you're gonna get like some of these guys that ask questions. They want to see the market down for mid-May. Like their friends are the streets, so they want down. So they're gonna push on that narrative. They will push on that narrative today in questions. What's coming down the pike on SOH and stuff like that. So you're gonna get that bear. You're gonna get that softball bear questions, hoping to keep Jerome on a hawkish track here. Just a few moments now. We've got 3 more minutes until the decision. Hood? I haven't looked. I can look though. You want to see Hood real quick? I got Hood coming down. Should trade like $60, somewhere in there. Maybe close out 50 would be nice. Close out the you got some gaps at $50. But I do think you break away on Hood. You close the gap at like 50, and then I think Hood escapes and goes moon. And you'll see all this black if you're new to the show or new to FOMCs. This is where risk comes off market. People stop trading this here. I'm going to take this one away right now. so we can see it as we get the decision. He priced in nice down move today. We were down, what, 20%, 0.2? I think today's move is 0.75 and tomorrow's 1.2025 or 1.5%.
10 seconds.
Listen closely. No change, no change.
No change. Rate remains unchanged at 3.75% as expected. So the Fed voted 8-4 to hold the benchmark rate at 3.75%. Myron dissents in favor of a rate cut. Hammack, Kashkari, and Logan voted against the easing bias. And they noted Middle East developments adding a high level of uncertainty. So looking through the rate statement now then, Fed say that developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. The Fed characterizes inflation as elevated versus somewhat elevated in the previous statement, citing the global energy prices. Fed note that the committee is attentive to risks on both sides of the mandate. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. So in considering the extent and timing of additional adjustments to the Fed funds rate, the committee will carefully assess incoming data, evolving outlook, and the balance of risks. So the vote in favor of policy was again 8-4, with Myron dissenting in favor of a 0.25 percentage point cut, Hammack, Kashkari, and Logan dissenting against inclusion of the easing bias in the statement. So the Fed voted in favor again 8-4.
So in line on keeping a hawkish tone.
So short-term U.S. interest rate futures continue to price in little chance of a rate cut this year after the Fed leaves policy rates on hold.
I've got the rate statement here. I'll post it in the Discord.
Treasuries are steady after 4 dissents from the Fed rate decision. To the markets, nothing really holding here. Did see a whipsaw in the dollar, small reaction in the S&P as well. Nothing noteworthy there.
Thanks, Dr. CS. And we're stalling, right? I was just talking to people in the Discord, and I was like, no calls yet. It's like, I want calls, just not yet. This one right here. Sup, big brain? All right, hold on here. Let's look at Bookmap really quick. Oh, I was mashing some keys on a keyboard over here. See that right there? See that fucking thing down there? Right fucking there. You see that fucking thing right there?
Extended losses against the dollar.
Watch that one right there. See that little white bar down there? That's the one you want to be watching right down there. Ooh, thanks for the changes to the statement, Nick. Appreciate it. Thanks for that changes versus we had some, I think I had posted in the Discord earlier changes to the statement in those FOMC previews. You should be able to compare those to what actually is the changes. Come on down, baby. Give me that cheap. We'll leave it just like this. We'll watch this white bar up here. That one right there. Hey, what are you doing? All right, I'm going to read a few things to you here. U.S. interest rate decision, 3.75%, in line. Fed votes 8-4 to hold benchmark rate at 3.5 to 3.75. Moran dissents in favor of a rate cut. Shocker. Middle East developments adding high level of uncertainty. I agree. We talked about that this morning with the demand destruction. With farmers and airlines and all of this. Middle East developments adding high level uncertainty. Hammock, Kashkari, and Logan voted against easing bias backed. That's kind of big. It shows that the Fed is going to attempt to talk down inflation. Hopefully they can acknowledge today that it looks like not this market, but like markets like for selling goods and shit, like are they doing what they need to do to create that demand destruction? It'd be nice to hear them compliment that, but maybe they won't say that because they don't want them to stop doing that. Fed characterizes inflation as elevated versus previously somewhat elevated, citing global energy prices. Committee is attentive to threats to both sides of the dual mandate. So that means a bunch of like, I'm not going to do shit and leave it for presumably Warsh to be the next Fed chair.
JP Morgan's Michelle with some commentary says the Fed is clearly moving toward a symmetrical policy.
The Fed committee is attentive to threats on both sides. Developments in the Mideast add to significant uncertainty about economic outlook. In evaluating the scope and timing of further Fed funds rate changes, committee will thoroughly review new data, shifting outlook and risk of balance.
JP Morgan's Michelle adds that the Fed is telling us increasingly they're concerned on the price level. Tasnim news agency says 6 Iranian crew members of the Iranian-flagged container ship Tuska freed after the seizure by the US. 22 Iranians are still being held, though.
Yeah, Fed rate decision and policy statement draw highest number of opposing votes since October 1992. Whoa. That's huge. Recent indicators suggest economic activity has been expanding at a solid pace. I agree with that. I think that people can handle this. I do too. I'm with that. It shows too that people are absorbing this pretty well. I mean, you want something that's hawkish and damning. I've got a neat article here. If you want something to read, like should the Fed be dovish? Can we handle the price shocks and all that kind of stuff? We could probably handle them. I got a neat article here. Here's an article that I have. Did Americans scrimp at other retailers to buy gas? Nope. Not Americans born to splurge. I'll post this in the Pro channel. You got to remember that there's a huge difference between people angry about inflation and can they afford inflation. Open the first or second door right here. We got 2 more to open. You should read that right there because, like, I tell you guys this all the time. Like, let me explain inflation to you. Like, or I think I've explained it a bunch, but it goes like this. Like, especially when we level up on wages. So, like, I'm making $10 an hour during pre-COVID.
Extends declines last down around 0.4% following the Fed rate decision.
All of a sudden, my wages ripped to $30 an hour. Now, let's say $10 bought me 7 bananas. $30 now buys me 10 bananas. Right? So I get an extra 3 bananas, but I'm making $30 an hour. I should be able to make, or I should be able to buy like 21 bananas, right? Or 30 bananas or whatever, but I'm not. So I'm angry. Does that make sense? I'm not going to publicly acknowledge to you that I'm able to now buy 10 bananas where I could buy 7 before. But I'm angry because I'm now making 30 an hour, and I want to afford 30 bananas. Does that make sense? So behind the scenes, I'm going to be raging pissed. I'm going to complain about inflation. I'm going to complain about wages because now I'm making 30, and my like how I'm living is better, but not where it should be for making 30 per hour, right? So I'm raging pissed. Oh my God, now I'm making 30. I deserve to make more. And on top of all of that, you also have the K-shaped part of the economy where everyone's looking up and everyone's even more angry. And then the third thing that impacts this is that in that K-shaped economy, the bottom 15%, they're even worse off than they were before. So you have the heightened effect of them in the zeitgeist. I just posted an article for you in there. Did Americans scrimp at other retailers to buy gas? Nope, not Americans. They had no fucking problem buying it. And I think part of that is, like, part of this equation right here is, can Americans absorb this closure? Will businesses create enough demand destruction? Do we need the intervention of the federal government in some fashion to stem it? And if not, then we let the markets play it out, and we let the markets do it for us. And if not, then we bring in, the Warsh hammer or the Jerome Powell hammer down the road.
Morgan's Michelle says the Fed has shifted to more hawkish.
Yeah, it has shifted more hawkish, and they're going to try to talk you down with more hawkish tone, and will only do the rate hike if they need to, due to employment numbers. So we are trading lower right now. We're going to put in a new low at 708.33. And we're coming into the most hawkish part of the day today. I will have a video up for you here in just a few minutes. Hang tight 1 second here. The news on fire right now. If you haven't been reading, Wolf Richter's been on fire for like the past 4 weeks. If you aren't reading Wolf Richter right now, you should. Huge shout out to Wolf Richter right now. He is he's rocking the data right now. If you haven't been reading his stuff, get back into reading his stuff.
We do have a video on the feed for those interested.
Let me just check to see if Trump's talking. He's going to be like, he was in his, yeah, he's talking now.
So we have a good shot. We've authorized it. And
We'll keep him on for a few minutes.
Jared's done such an amazing job at NASA. I think we have a good shot, right? We'll see.
Yes, Mr. President, we have an achievable plan now back to the moon. And we're back
It's a really weird audio signal.
so we just sent Artemis 2.
Yeah.
We'll protect for up for 2 hours.
He is the voice of reason, Wolf Richter. He is the fucking voice of reason.
Space, I started Space Force, as you very well know. It's been very, very important. And they tried to kill it.
But it doesn't sell newspapers, does it?
They wanted to kill it. And it's going to turn out
Or the spin that's spun on econ data.
to be one of the most important things they did. But we got involved with NASA bringing it back. And I was saying when I first looked at some of your facilities, they had grass growing on the runways, right in between the cracks of the asphalt. And but not anymore. It's really strong. And you know what they do? One of the things they do that's so important is for our military offense and defense. So important is for our military offense and defense. And a lot of people say, well, is it worth it? It's really worth it because what's happened militarily, you see what we're doing militarily, a lot of that comes from space. So it's been pretty great. Good question. Yeah.
Mr. President, I have 2 questions for you. First, on the topic of space, do you have an update on UFO files and what might be when we're going to be seeing those?
You can kind of see it in Trump's face right now. He's like, I'm totally going to shit on this guy today.
They want to find out about the UFOs.
He's going to have the astronauts here. He's like, I'm going to sit here and hold a fucking press conference during the Fed presser.
We're going to be releasing a lot of things from that we have, and I think some of it's going to be very interesting to people. I've interviewed people, my first term primarily, but I interviewed some pilots, very solid people, and they said they saw things that you wouldn't believe. So you're going to be reading about it. Yes.
Sir, you spoke to Vladimir Putin not too long ago. Did you talk to him
I
about
did today?
Did you talk to him about progress in the space
Yeah,
area? And what else did you?
I didn't.
The Trump pump.
I talked about Ukraine, and I talked a little bit about Iran. I talked about a few different subjects, mostly about Ukraine, and we had a very good conversation. I think we're going to come up with a solution relatively quickly, I hope.
What does he want?
I think you'd like to see a solution, I can tell you, and that's good.
What involvement does he want to have in the Iran situation?
He told me he'd like to be involved with the enrichment if he can help us get it. I said I'd much rather have you be involved with ending the war with Ukraine. To me, that would be more important because we're gonna have that. Look, we're not going to let Iran have a nuclear weapon, and we've knocked out their Navy, we've knocked out their Air Force, we've knocked out their anti-aircraft, everything, apparatus, everything they have, their radar, they have very little left, and they have some missiles, a small percentage. They have a small percentage of missile-making facilities. We knocked out about 80% of them. The rest could come very quickly if we don't make a deal. They're not going to have a
You guys are fucking hilarious.
just about everybody else does. And so we talked about that a little bit. He doesn't want to see them have a nuclear weapon either. But I had a long talk with President Putin. I said,
Just let the fucking, you got to let the options chain is a disaster right now. Just give it a minute.
No, but I was wondering. I was just going to ask
you
you.
know, I asked him about, even if it's a little ceasefire, there's so many people being killed, it's so ridiculous.
Thank you, Mr. President. In light of today's Supreme Court ruling on the Voting Rights Act, do you want Republican states in the South?
What do you guys do? Oh, yeah, thank you. Well, wait a minute, don't do that. That looks like I'm getting a hand job or something. A handy.
Contractors, because we're trying to get the ballroom built ahead of schedule. It's right on.
My camera is bouncing around. It looks like you're touching me or something.
And I was also with commissioning some people, but one of, David Warrington's son. I don't know, you know David. Everybody knows David. He's got this incredible.
They do. They probably think you're underneath there giving me a handy. These are degenerate people that I talk to. Well, there's always one that's like I'm a this or I'm a that, but I'm not a degenerate.
That's the kind of ruling I like.
The rest of them are all degenerates, though.
Really? Is that right?
Looks like someone just commented. Looks like.
On your call with President Putin today, do you think the war in Iran ends first or the war in Ukraine?
Well, we talked more about the war in Ukraine, but he would like to be of help. I said, before you help me, I want to end your war. So we had a good talk. I've known him a long time. I think he was ready to make a deal a while ago. I think some people made it difficult for him to make a deal, but we talked more about Ukraine.
But which war do you think ends first?
That's an interesting question. You know, coming from you, that's very interesting. Which war would end first? I don't know. Maybe they're on a similar timetable. I think Ukraine, militarily, they're defeated, okay? You wouldn't know that by reading the fake news, but militarily, look, Navy...
Yeah, I'm streaming the FOMC and I'm getting handy.
Right now, 1 quarter.
I wish.
Typically, that's pretty good. What do you think?
Actually, I don't wish.
It's going to be hard for them to make...
I've had a streamer friend of mine. You guys know him. He got in some trouble for something like that. It's like streaming, getting laid on without knowing you're actually streaming. It doesn't end well.
And they have drones, and most of them are gone. Most of the factories are mostly gone. And we have tremendous anti-drone equipment now, between lasers and that new, very special machine gun that knocks them out of the air like flies. And
You mean like the Browning 50 cal? Is that what you're talking about, Trump?
to knock out a-
That new machine gun?
So I would say Jared would tell me that with everything you just...
No happy ending?
And in addition, their economy is crashing. Their, as you know, their money, they call it their money. They don't have a name for it. Their money is valueless. They've got inflation that nobody's ever seen before. Other than that, I think they're doing quite well. If you read the New York Times, you'd say they're doing wonderfully because it's fake news.
So let me check this really quick here.
I mean, you cover it all the time. You think they're doing well? Do you think they're doing well?
Yeah, still don't like it here.
No Navy, no Air Force, no anti-aircraft apparatus, other than what
Let me just check the daily really quick.
they may have brought in some light stuff during the ceasefire, and we know
I mean, that low right here is like the demand line on a daily basis. This is support right here. Or it's the start of support, I should say. This is the beginning of this tick right here is the start of support.
was he considered a win for who?
Win for Republicans.
I love it.
But my question.
This is a very good. We can end this news conference right now. I want to read it.
My question
Wow.
for you, Mr. President, is that some Republican governors have not responded in terms of what they're going to do. I guess early voting, for example, in Louisiana.
Republican
starts-
governors, what?
Republican governors.
What about it?
Early voting begins Saturday there, for instance. Should they redraw the map in the next couple of
I would. I mean, it depends. I mean, some states don't need to redraw, and some do. I mean, I know what the concept of the rule. I just haven't seen the result.
Oh, I gotta.
Yeah, I would say generally, I would think that they would want to do it. Some are greatly helped, and some, didn't make much difference. Yeah, I would say they would do that. They have time to do it. Yeah, please.
Thank you, Mr. President. I wanted to ask you, there's a lot of drama on the House floor today. Several bills were stalled, and a rule took 2 hours to pass today, and there's still some tension over the Farm Bill. Do you think that you need to get more involved legislatively on Capitol Hill?
Well, we want the Farm Bill. The Democrats don't. We want security, okay? We need security. We want security. The Democrats don't think we need security. They actually do, but they suffer greatly from Trump derangement syndrome, like at levels that nobody's ever seen. They're sick people. There's something wrong with them. They don't want to pay anybody for security. They don't like ICE. They don't like Border Patrol people. They don't like the people that keep us safe. When they ran this, they let 25 million people into our country, and many of those people were from prisons. They were from mental institutions, drug dealers.
Be careful here. There's still like VIX is still like spiky here.
Half of whom committed more than one murder.
This is a trap for bulls.
I happen to like law enforcement. They essentially want to defund law enforcement, and I don't think the public's going to let them get away with it. We got it all approved in the great big beautiful bill, and they want to renegotiate. We don't like that.
Yesterday, Mr. President, the King's speech that he made to Congress, he spoke strongly, forcefully about the necessity for a strong NATO alliance. He also spoke about the necessity to continue to support Ukraine. Did his speech...
There is a bull trap in here. Just be patient here. Bears might be right here.
Exactly correct, but I was very disappointed with the fact that when we called on them to give us a little hand, we didn't need it. I actually did it just to see whether or not they'd be there. When we called on NATO to give us a hand with Ukraine, and in particular the most recent, we asked them to do certain things on Ukraine, and we also wanted them to do things with Iran. And on Ukraine, they're very much involved, but they didn't do things the way we would like to see it. It's been going on for a long time. And on Iran, they weren't there. As you know it better than anybody. They weren't there. The king is fantastic. We spent a lot of time together. We had a lot of talk. We talked about this also. And
I have to check something really quick, so just bear with me as I bring this up, okay?
And I think if he were doing that, if that were up to him, he would have probably helped us with Iran.
But wait a minute.
He would have followed the suggestions we made with respect to
Think I do it right here.
agreements on Ukraine, and not having to do
Hold on here, guys.
as much as European countries. But no, he's coming back tomorrow. We had an incredible evening last night, and
Okay, where is it at?
tomorrow he's going to come back and see us before he leaves, and but
There we go.
I think he's a phenomenal representative for his country. I think the
Something's wrong here.
United Kingdom should be proud. I loved his speech yesterday. I watched it
Hang tighter, guys.
last night. I don't know about my speech. I thought my speech was okay too, but I thought he was. I think he's an unbelievable king.
I don't know why that audio just cut out there.
Queen. They are.
This morning, we were talking about how busy you were this morning. James Comey was in court. He self-surrendered. He's now been charged a second time. This time over a social media post with seashells that said 8647. Do you really think that he was endangering your life or threatening your life with that charged a second time? This time over a social media post with seashells that said 8647. Do you really think that he was endangering your life or threatening your life with that?
Well, if anybody knows anything about crime, they know 86. You know what 86? It's a mob term for kill him.
What? Mob term?
The mobster says to one of his wonderful associates, 86 him. That means kill him. It's. I think of it as a mob term. I don't know. People think of
A mob term?
having to do with disappearing, but the mob uses that term to say when they want to kill somebody, they say 86, the son of a gun. I'm trying to keep the language nice and clear. They don't use that term, son of a gun. They use another term.
What?
But do you really think your life is in danger? 'Cause that's the
Probably, I
argument.
don't know. Based on what I'm seeing out there, yeah, the people like Comey have created tremendous danger, I think, for politicians and others. Comey is a dirty cop. He's a very dirty cop. He cheated on the elections. He tried to help.
All right, we're going to cut across from Trump here in just a few moments.
I wasn't involved, but he should have proceeded with. No, he's a dirty cop. He's a crooked man, yeah.
Mr. President, you just described there's been disagreement between the U.S. and Keir Starmer on support for Iran. Did your visit with the
Somewhere out there, there's a MAGA guy, and he's like, don't cut away from him.
King really was just extraordinary. I mean, he's an extraordinary man. He's an extraordinary person.
Let's watch this closer here.
It helps it from the standpoint that, when you like the king of a country so much, it probably helps your relationship with the prime minister. But, in that case, the prime minister, I said, do you want to send a little help? He said, no, we'll send it after you win the war. I said, that's not good. That's not good. What do you think of that, Jared?
I know, like 86, isn't that just like we don't have anymore? That's what I always thought 86 meant. We don't have it anymore.
The United Arab Emirates, the UAE.
I don't think anyone in the world uses 86 in that term. in that context he's talking about.
And very smart.
Like,
Maybe he wants to go his own way. That's a good thing. I think ultimately it's a good thing for getting the price of
2 minutes until Jerome.
everything down.
Purple tie today
He's a
or red tie?
I'm okay. They're having
Probably purple tie.
Kevin Warsh passed a hurdle today. The Senate Banking Committee
Yeah, if you run out of something, right? It's 86, right? It's gone. We don't have it anymore.
In mid-May, is it your expectation that he can persuade the other Fed governors?
Yeah, he's not wrong, but I don't think it. I mean, maybe the etymology of it is that it comes from. Let me look it up. Hold on.
Anywhere in the world where
The etymology of
it's made in our country at a level that nobody's ever seen. No other country's ever seen it. Tens of billions of dollars are being invested. Factories, auto plants, AI. I mean, not just AI, because AI is.
Yeah, it still comes from restaurants.
I'm letting them build their own electric plants. They're building.
even Google disagrees with them.
And by the way, they're building electric plants.
It's slang for nicks. Part of a jargon used by soda jerks. Oh, wait a minute. Here we go. I gotta turn this guy off. This guy lives in his own world, I'm telling you. All right, so we've got the Fed guys here, right? Like, I'm turning off Trump right now. I will read if Trump says anything noteworthy. I will. Trump saying it's good to lower rates. If he says anything, I'll repeat it and interrupt Jerome if there's anything of importance. I still have no audio from this source. If there are any problems, I will switch sources. Seems like it's the same source as the AP, but I'm on the Federal Reserve site right now. We'll shift if he comes out and I can't get any volume or anything. Every once in a while, there are some technical issues from the Federal Reserve. Oh, yeah. Come on down there and just drop it like it's hot. Oh, right there. Just pull it over there. Just like drag it over there a little bit. Here comes the bears. Someone tell that guy that I can see the porn on his laptop. Someone getting oh, here we go. Still no volume here. I still have no volume. There we go. Purple tie.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up.
I'm going to speed this up.
In part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending.
This is why YouTube sucks.
And business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close.
Need more water, please. My throat's bad.
I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process.
Classy guy.
The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System.
Take a victory lap, old man.
The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor.
Yeah.
Time to be determined.
Woo!
I plan to keep a low profile as a governor.
Oh, bullshit.
One chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
Zing!
Sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that.
Thank you for the water.
Can you talk about what is
Thank you for the water.
decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed.
Bullshit.
Which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history.
But they did it, so I'm going to stick around now.
I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that
Trump's fucking raging right now. He's going to go on Truth Social.
envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so.
Ooh! Look at them, they're all smiling, and then they switch their face. I don't know if you can see that at home, but they were all shit-eating grinning, and then the moment the camera hit them, they got straight-faced.
I don't see that at all. As I mentioned, you know, I'm a little...
If you're at home, go back and look at the faces change. They thought it was fucking hilarious.
You know, the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. You know, in addition, I don't see how this...
He's saucy today.
My intention is not to interfere. You know, I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't.
Remember that he is like Warsh, believe it or not.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored.
Are we getting fucking Nick the Bear?
There has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, you know,
this is where the hawkish speak comes in to try to bring it down into 2%.
Working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. You know, we really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy,
that's bullshit, by the way. They want the soft landing to last as long as possible.
You would look.
They don't want 2% all at once. The Bears do.
And monetary policy works with long.
The monetary policy wants to promise.
I think that is all the more true, given that we're several years above 2% inflation, and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet, and I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was social.
Remember, if he ever admits that the target was reached, sell everything.
Right, given how different the inflation outlook is now versus a meeting or two ago, and what more would have to happen for it to get evicted?
So
is this Nick the rate hike Timorous?
We had a discussion about that at the last meeting, and we talked about it in the press conference after the
Nick the Bear?
We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So,
I smell wet matted fur.
It's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to
who's we?
Crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things. And if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates, and for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
For the American people.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough.
We're already restrictive. What are you doing?
Interest rates might have to go up, or was this just
This guy's from Bloomberg. He's like, I need a dip to buy in May.
Warn people that you're worried about the war impacts.
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be...
Thank God he just said that. This fucking guy.
This is consistent with markets are doing. And again, it's...
So you think we should go more like right now?
These changes, there is, it's a form of forward guidance, and
should we over-tighten right now?
You want to make them in a way that will be sustained and continue to make sense, and not something...
Smash these bulls.
Fairly quickly. So I think we just, a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument, too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So,
that fucking guy knows for a fact they're not going to do shit right now.
In favor of two-sided warning.
I forget his name from Bloomberg.
Staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Yeah.
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well, he has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something
A shadow chair.
I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to wait and let things develop.
Thank you.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry.
Watch this right here.
It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to, I try to deliver a message on behalf of the committee rather than 18 other people going out and delivering their message, and it's going to be all over the place, because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So yeah, I'm not going to go into the real small specifics, but
you want to watch this right here?
Very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something, like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard.
Nice strike right there.
So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. We will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. Those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
That's not true.
We cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it, between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable. But at the higher end of the,
how you doing there, buddy?
Consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992, are you handing off a divided Fed?
He just answered that fucking question like 5 fucking minutes ago.
We have always had vigorous debates, and
these guys just won't fucking relent.
They've been really good.
You should have said that. I just answered that fucker. Next.
Unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? It's central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long.
This is a big moment here. It's hard to get above right here.
How restrictive or not is policy.
We could get ground into this.
People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be.
There's a lot of sellers here. Just a heads up.
I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're...
Wait a minute, did you just say that the Americans are better off than they're supposed to be?
Gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
Agreed.
By staying on?
I'll stand on what I said earlier.
Thank you.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it, in fact, it's all legal at the end of the day, but it's monetary policy. We don't want to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks it would be good to repurpose those to serve other purposes, but that gets dragged. That's dragging.
This is where the money is, right here.
Fiscal policy. So we've resisted that.
Well, and maybe another way of asking it too is, do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations.
If this holds, should Rampo-Rama, big trade in here.
To do that, and we've been successful so far, but that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on
need coffee.
considerations. But we've had to fight for it, and I'd like to think that we can get out of that.
No, I'm drinking some right now.
Back to respecting,
I got to go to track meet later today too, right?
which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina.
I need an espresso.
Katerina Saraiva, Bloomberg News.
I need a double espresso martini.
What you've heard from your colleagues on your decision to stay.
No dairy.
Their support. And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the reserves, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that. But everybody's on this.
Getting a vol watershed moment. This is good. Vol collapsing on VIX 9 day.
Reserve Bank presidents from office.
Just note that VIX 9 day coming into the half-hour hourly trigger. Keep an eye on it.
That would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine.
Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
We're so goddamn good.
That's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like...
Slap that ass, push it up there. That's what you tell Jerome.
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening.
It's such a fucking scam what he's saying right now. He's like, I'm gonna stay in that soft landing as long as I fucking can from my fucking history. It's like we ain't hitting 2%. He's like, it's like, what are you out of your mind? He's like, we're gonna keep telling you that. He's like, the day that I tell you that we hit 2% is the day you sell everything.
time in a way that doesn't
That's right.
damage possible. And
That's right. That's right.
that is
That's right. Do that mandate, bro.
Would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of.
Yeah, we want it resilient. A little bit resilient, not a ton, but resilient. We want to stay in the fucking. We want to stay in the fucking. Right, that thing right there. That soft landing, bitch. The long ass runway. It's a long runway. How long you want a soft landing for?
Some of it is just the apparently insatiable demand for data centers all over the United States. So a lot.
It's not bullshit. It keeps us in the fucking soft landing. Literally, it does. If we hit 2%, we're going into fucking stagflation. God, that's it. Go stags is a bear. I already know.
Of a momentum in the economy is actually higher than that. So
Somebody tag him for a bear. Keep going. Squeeze him.
if you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to.
Exactly, Czar Trader. It's a scam.
It doesn't feel like a good labor market to some.
Yeah, keep squeezing them. Keep on fucking squeezing them.
Really low, and there's effectively no new net job.
Yeah, there you go.
That's.
Oh.
In a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So, so that's pretty good. You know, inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly, and we'll just have to see how that works out. In the meantime, you know, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement, and you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the
They just want to fucking.
shifted away from cuts towards holding?
She's like, I just got to ask one more time.
You know, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, you know, there's a lot of signaling going on when you change guidance like.
Oh yeah, that's a fucking 0.5% right there, boys.
Of us didn't feel like we needed to send a signal on that right now, but maybe it'll come to that. And the reason is because, you know, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it, and of course we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But
he's like, I'll hike up fucking.
At a meeting at which
he's like, I still have the whips and dips and chips and chains from yelling if you want to see those.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate.
Yeah, you fucking whip that cock out, bro.
Really, what is driving this? I'm not looking to be, you know, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close.
I'm only putting this in because when you hit this up here, this would be the deepest it would go. Not we have to go there. This is the place for the bulls to hold on to right here.
You would take a mulligan on.
Yeah, it's hard. I wouldn't want to single out individuals.
It's more for my notes so that I can re-enter or not?
All of us together have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us.
He's like, my tool is big.
Because we've been in a situation of supply shocks really for 6 years, and that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
I'll tell you what, Jay Powell, there have been many times where I fucking hated you, and then I really liked you, and you've done pretty goddamn well, bro.
Which might sound
overall
is so critical. I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after, experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had pandemic inflation everywhere in the world, and
just a note that we just took out the 1 hour candle. I think 80% of it on the sell at 11:30 this morning. We didn't take the whole candle out, but I think we took enough of it out.
But what I would say to the
we might need one more tick.
Is that
we need one more, just one more up here. If we hit this one, it's wide open to the upside. This is a very contentious area for continuation up into the end of the day.
And focus only on that and ignore.
You want to be paying very close attention to, I think it's right here.
This isn't bipartisan. This is nonpartisan.
It might even just be one tick. It could be like one more penny.
People doing these things, we don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us and our ability to control inflation and have any respect.
I think it's like an extra. I think it's like literally one more penny. We would have erased the 1 hour candle from 11:30. Not erase, but you erase enough of it that you can go up.
Markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case.
Look at how close this came right here. Look at this. Look at this down here. That was within a penny. Look at this shit.
If you disagree with that, then you can go.
This was the last place for a door lower right here.
Credibility.
The door is closed.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't
remember that the 1, 2, 3 is good. The 4, 5 is never good. It's like a very low percentage. You want to see this? We want to see this tick up here.
It's been remarkably resilient for.
There's like one more penny up here.
Shock after shock, and consumers.
Where if they hit it, it opens a door higher.
The retail sales numbers that we got most recently, people are still spending.
Yes, they're still spending, Jerome. Tell them.
That go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see.
They're whining and bitching, but they have the money, bro. We know it. You know it. I know it. They have the money.
I think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers?
This is 3:50 in the afternoon. You guys know what that's all about.
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices.
VIX has a gap to close down below.
The effects are not that big yet. We're a huge economy.
VIX is about to collapse, and we might squeeze here. Watch out for a squeeze.
Like a European country where 50% of the external of the GDP is in.
We're about to close a bunch of gaps down below on VIX 9-day. Watch out for a quick green bar up if you're trying to get out on that big squeeze.
And certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
All right, that's it on Jerome Powell. Give me one quick second here. And close that up right there. If you want off the bus, this is a place to get off the bus. If you don't know, I think I posted it in the Discord earlier. We took a trade in the Discord today. Right here. Took this trade right here in the inside the Discord up. Yeah, we're long right here. We also alerted the Discord about the places to get off the bus, where the bus is going to stop. If you want off the crazy train, or if you don't want to deal with the volatility of earnings, this is a place for you to get off the bus. We still haven't hit this high tick right here. I want to see us hit this. I want to see one more. I don't know if we can actually get it right now, but we'll see if they can pop it right here. You want to see that one spike up, because it opens a huge door to the upside. If we don't see it, then we're kind of stuck, and we'll end up stalling in here. I do have a bunch of earnings up here in the background for earnings after the bell. I will stick around. I'm going to try to stick around until 4:15 p.m., but I do have to go to my youngest daughter. Is very needy right now. It's springtime and like school's wrapping up right now, so I have to be at a lot of things. I probably spend 4 or 5 nights right now with my youngest daughter doing stuff for school, and it goes into late into the night. It goes into like 8, 9 o'clock at night some nights. So I do have to head out to a track meet today until at 4:15 I have to leave to go to this track meet. But I will stick around for the beginning of earnings here. Hang tighter. We did get a good trade in today. We're 1 for 1, 100% win rate as usual. Hold on here. I'm giving you guys options right now. I will say this. Into this close, I'll say this. All the earnings look good. The problem isn't, are the earnings good? The problem is entries and exits, right? And the only thing I would say here would be just note that in that whole thing, that whole rolling options thing, that at some point we're going to roll those options. At some point we are going to roll higher to sell calls at 7250 and 7300. So just be aware of that, and be aware that let's say we did that in the overnight or something here, and then you come back in tomorrow and SPY is right back where it closed. when we service earnings season, oftentimes you'll see like a bloodbath in earnings reports, and then SPY will be flat on open the next day. And the same thing applies to on the upside, like big move higher, and then you're stuck holding your dick at open tomorrow. So for me at least, I like the synthetic trading. I love like you get long synthetically through Qs or SPY or one of the triple leverage shit, and then you're out by 4:15 in the afternoon. You leave the rest of the bullshit to do or die traders into this close. I'm gonna get rid of this so we can see it. So like I'm bullish on this close here. My that's not my problem. My problem is like, does it squeeze up and then they take all the money and run, and you're holding your dick at 9:30 in the morning tomorrow. It's like entries and exits matter in this stuff, unless you're long underlying, I guess. I do have some concerns still. There's some secret sauce here too. Not secret sauce, but like we're all going ooh and ah. But yet tomorrow, we have in the morning on Thursday we have PCE. So you get the good news today, or not good news, but you get the I don't want to say he was a hawk today or that he was a dove. I think he was more a realist today. And I was hoping for a little bit of that. We were discussing it here earlier in the show that about the business cycle and letting it do its thing right now, and then you don't have to get so militant. And there was a lot of they were looking for that today, that militantness. Keep an eye on this white line right here too. We don't want to be cutting through this one and not hitting this top one. It leaves the door open to more lows, believe it or not. Now, what are my takes on the close here in this big report? I think they all go up. And you're going to get a spike down too in a lot of these stocks. Like you go over after the bell, they spike everything down. So if you're looking for like a dip buy on the close, like if you're not in a trade right now, or you're getting out of this trade, or you're still on the bus or something like that, if you're looking for a chance to buy a dip for earnings synthetically, you get not in the ETF, but in a stock, you get the big spike down, then it whips up, then they take the money in the top, and then it comes back down again, right? So just into this close, if you're trying to synthetically trade these options, being down here in like SPY or Qs for a potential roll to the downside after the bell to get long, you can do that. I still do like the idea, if you're not long already, that I still like the idea of waiting down below or adding to your position, or closing and adding to your position, whatever that may be. So just remember that on these big earnings days, oftentimes you'll be looking for a nice deep low to get long in. There's something good about this too, is if, let's say you wait, like grind this out, we slam down really quick. It also gives you the opportunity to like hold off on buying those 0-day calls. If you start seeing like bad reports after the bell, you can say, I'm not going to buy calls. If you see that they're great and they just could do a quick swipe to the downside, you can get long on these calls into 415. Just a heads up on that. What else do I have for you guys? I think that's it. I think that's it for the close today. There is something here though to remind you of, if you want some bearish, like, is it going to be bearish after the bell? We are closing a gap right now on VIX 9-day, and from there the way is higher. $16 on VIX, that would be matching all of the lows for past, since the 22nd of April. So just be aware of that. Now we could get some doom after the bell on SPX and Qs on taking the money and running trade after the close here. Just be aware of VIX is kind of disagreeing with some of this like bullishness after the bell. There is still a little bit more room. There's like, we're at VIX 9 days at 17.18. The gap is at 16.55. So there's a little room to run, but just be noteworthy that like VIX is primed here for some bad news at some point. Hold on, let me take this down here. And I'll show you where the dip buy for after the bell would be right here. You expect these guys to step in after the bell. And you see that right there? That's opening this. That's why I marked this one, is because this is opening some kind of a thing down here to go higher. Just be aware of it. Overall, my takeaways overall from this presser was it's one of the better ones I've seen. Maybe it's because it's the last one. Oftentimes these reporters are not asking questions knowing the answer, or like they ask a question, they know they're saying something that's not true. And Jerome lies too. Like the reporters lie, Jerome lies. But his responses were fairly well even-handed today, in my view. Looking forward from here. They really didn't capture him inside of. They really didn't trap him into anything today. They were looking for some stupid answers from him, and they didn't get it from him. He even shit on the idea that there's no cuts in the forecast, but there actually are cuts still in the forecast. There's actually a hike and a couple cuts. In the forecast, and I don't think you should rule out either. I don't think you should rule out like a rate hike when Warsh comes in, and then a couple more cuts from Warsh this year. It all depends on things that we don't know yet. We don't know how business or how enterprises are going to act. You heard the one guy ask about the price of airlines. He didn't frame it in a productive way. He framed it for a news story. I wish Jerome had said something about that, like, "Hey, they're raising prices to reduce demand, so the markets are functioning themselves currently." Very well, believe it or not. If you didn't see like a rate or that big of a rise in airline flights, there should be some question about that. But companies are self-policing inflation, and I mean that by, if flights are up just slightly and they just keep increasing slowly over time, and that's not what's happening. You're seeing pricing it's being the pricing that's coming out is absurd, and it's an intent to stop you from taking flights due to the kind of inflation this is. So the markets are doing quite well right now, in my view. If they don't, if it becomes something where things do get out of control in terms of inflation and the price of things, and if you see the demand still there, which is rising those prices, then you would see more than likely Warsh come out, or even Jerome come out and slam the market with a hike, believe it or not. And then if we go past it with too much damage, with pricing getting out of control, then you'd probably like where it starts breaking the economy, you'd probably see the Fed step in, including Warsh, to do some cuts or even some QE if needed. And remember, everybody says Warsh is not a QE guy, but he is. He has participated in QE. He doesn't like excessive QE, but he's into QE. He's into cutting. Even if he wants to set a new regime. But I think any new Fed chair would say that. Any new Fed chair is going to say, go away. I want to make my own thing. Now that brings up the last question here, which is, will Jerome be considered a shadow chair? I don't think so. I think all these fucking bankers know each other. I think you know that. I think these guys do have huge egos and they don't want the shadow chair. But I don't think Jerome is that guy. I think Jerome is more thinking about the independence of the Fed, and that he's a known quantity for the independence of the Fed. And if Jerome goes away fully, there's a seat available to fuck with that independence of the Fed. So I think even Warsh would want Jerome there. To just that known quantity of he's not going to allow the non-independence of the Federal Reserve. And let's be honest, you guys. Like I got to be honest with you guys. It's not just Trump. I don't fucking want the Democrats to have a turn at this either. You as a participant should be thinking about these things. Some of this stuff that's the shit that gets thrown on the wall might stick. And oftentimes when there's a power grab that's successful, neither party will give that up. They're both like, if you think about like the executive and the congressional branches of our government, I don't want to say it's the judicial as much, but remember that nobody wants to give up power once they have it. And I would think the same would hold true with the Democrats. If they could put their fingers into the Federal Reserve, they would too. But remember that shit cuts back both ways. Do you know what I mean? And the only loser here is you and I. No matter what your party is, your party affiliation, that the slow degradation, like it's like, yeah, I want this, but then who's really getting it? Both Dems and Republicans get that shit, and it can be used as a. We start to lose what we are as a country, the separation of the three branches in our government. We start not being who we said we were, and that's a big problem. The second problem too is how is it wielded, that power, once it's given up by these agencies to the executive or to the legislative branches. Are we trying to get into more of this for the future? You know what I mean? Do you want to the can of worms that it opens is likely not going to be positive. It creates more division too, down the road, and moving forward. Let me draw this one in too right here. There's another one right here. There's two of them here and here for you if you want to buy a dip after the bell. And not only that, you got to remember that, no, I'll leave it simple. But if you're a market trader, right, you want the Fed independence, no matter what your politics are. You absolutely do. And you want the transparency as best as you can get, the guidance and all that kind of stuff. I don't know why you would willingly give that up. As a trader, as a participant, I don't know why the fuck you would give that up for a party win. Politics have nothing to do with the fucking stock market. It's bizarre to me. I don't want to be like, I don't want to see either party have pulled that power or that authority away from the Fed. Even with my politics, and I don't want to see anyone wielding that stuff. Even if there isn't independence, I know that people say there's no Fed independence. I believe that that's somewhat true to some extent, but even just the window or the idea that there is independence needs to stay in place. To like outright public corruption, I don't like it. I don't like the acceptance of it. It erodes the fabric of our society. So I like that he's there. And I also think, too, that part of it was a jab at Trump. I think that had he not gone after Jerome for criminal stuff, he would have had less of a leg to stand on. And there's always that other effect, like for everything that you do, there's always another effect of what you do, right? I got what I want to get, but at the same time now, on the flip side of that, it's kind of like a dig on Trump, right? Well, you're the one that's like trying to send me to prison and stuff, so maybe I'll stick around just for this independence thing, and because this case still isn't resolved yet, supposedly, which makes sense to me. So that door was opened for Jerome, where he probably would have left if he probably would have left and not had a leg to stand on to argue to stay on at the Fed. And I think the market likes that he's on here too. This looks pretty positive right now, that they like that he's claiming that he's going to stay on for the independence of the Fed. I think the bond market likes seeing that. I think the stock market likes seeing that in general. What else takeaways from today? I think that's it. The one thing I would caution you on is that we have stacked data. So you hear this like talk from Jerome Powell, but we got stacked data coming up too that could fly in the face of what he's saying here. We've got tomorrow. We've got core PCE. We got a fuck ton of PCE stuff tomorrow. And then on Friday, we get ISM manufacturing PMI. On Tuesday, we get ISM services PMI. We get JOLTS on Tuesday. On Friday of next week, we get NFP, unemployment rate, Michigan consumer sentiment, which didn't show a bunch. Our inflation from the Strait of Hormuz is already showing an uptick in inflation. But yet again, we get another core inflation rate next Tuesday. We get the inflation rate month over month. I assure you right now, I'm going to tell you right fucking now that the inflation reports on Tuesday are going to be fucking hot as fuck. Your PCE is going to be hot as fuck. That's tomorrow. It'll leak into PCE, and it's going to leak into the inflation rate. And they're going to come in hot. I assure you, it's going to come in hot. It's already creeping into the reports right now. So just be warned. You got 2 inflation prints, one tomorrow in the morning, and you get one on next Tuesday. So if you got to rip up here into the close, you wake up at 8:30 in the morning, you're like, "Woo, making all this money. Oh my God, I think it's gonna be amazing." And then they slam SPY on a hot PCE print at 8:30 in the morning tomorrow. You're gonna have a bad morning. So if you're trading this synthetically into the close here, like some nice Qs, TQQQs, something like that, you can close them at 4:15. Do that. I prefer SPY, but you can do whatever you want to do. Try to close them 4:15 if you can. If you are long. I do expect that print to be kind of saucy in the morning and bring SPY back down to reality. Okay, let's do it's 3:47 right now. We're gonna do a quick everybody's here today, so I've been doing expectations only for Discord. We'll do some expectations right now, okay? And we'll do some expectations publicly for tomorrow for SPY. Okay, here we go. We're going to make this simple. I'm only going to start with the day right now. We'll make this nice and easy. Remember these white lines right here? They're still viable. 708.34, 708.77, 709.18. My voice is fucked again. There we go. I think it's greater than 20% or 30% the market's reporting today after the bell of market cap, I think. We took this one out right here, but failed to take this one out. This is the one that I wanted to see taken out up here. We didn't take that one out. Just see this here. I think that's a fake wick, but it might not be. This could be 1 and 2, and it's straight up. I think there's one more in here. I think it's actually like this, and then that's when you get your big push right there. It is noteworthy, too, that we did not get the new high yet. So you've got this prior high right here and here. This would be 1, 2, 3. And I think that this 3 goes higher. And then we talk about this over here. These are expectations. Now, let's talk about this too briefly. Oftentimes, not oftentimes, but everybody's on the wrong side of the trade. Everybody's bulled up. Too many calls, right? Just be aware of like, if I was a dealer, I'd be trying to sell in, send this down lower, and then print this when you're not looking. Weekends, of course. Just a note on that into this close here. But this is what I have projected into tomorrow and Friday. Big high up here. We'll watch this closely together into this bell. Go back over here. This should be 1600. There, push that up there, right there. think this is a 4-hour in here too. It was a 1 hour. We've got the
10.56 billion.
new squawker on.
$2.55 shortly after 4:05 p.m. Eastern Time. Microsoft Q3 earnings, estimated revenue 81.46 billion, estimated EPS $4.03. eBay Q1 estimated revenue 3.03 billion, estimated EPS $1.58. Ford Q1 estimated revenue 39.58 billion, estimated EPS 18 cents.
Thanks, Volwiz. I appreciate you, my brother. Thanks for posting that, Volwiz. If you're a pro trader, go look at what Volatility Wiz just posted inside the Discord. Yeah, I agree, Volwiz. I'm with you on that, bro. Thanks for posting that too, Nick. There's another thing too, which is spot up, vol up too, right? You get the spot up, vol up. I mean, the sucky part about spot up, vol up is once it ends, you're still rolling to the downside, and like spot up, vol up can last like for days, or like you're in the condition for spot up, vol up, but then it like fails to materialize. That happens a lot with spot up, vol up. It fails to materialize. Like the conditions are right, but we don't actually go into it. Thanks for posting that, Volwiz. I appreciate you, my brother. R1 is at 713.30. We're right at the pivot point right now. You'll hear reports here coming out in a moment. Let me show you the MOO right now, too. Or the MOC, excuse me. I'll post this in the market chat. I think. Like, I got so many fucking chats open. There's the MOC for the close.
Shortly expecting earnings from Amazon, Google, Meta, and Qualcomm.
I think I told you I liked Microsoft and Qualcomm the best. I'm grinding higher right now.
$10.
Come on, keep pumping.
Qualcomm revenue. Adjusted the revenue 10.6 billion.
Oh yeah, print me, bitch.
Adjusted EPS $2.65.
Print me, no.
65 cents, higher than forecast at $2.55. CapEx 1.08 billion. CapEx 1.08 billion. With Qualcomm seeing third quarter revenue 9.2 billion to 10 billion, around the estimate of 10.26 billion. You also see Q3 adjusted EPS $2.10 to $2.30, the estimate $2.43.
We hit one right here. I got out on that tag, as a matter of fact. I got out right here.
Qualcomm says China handset market to reach bottom in Q3. And says shipments have fallen short of consumer brand. Seeing earnings from Amazon here, EPS $2.78, $2.78, a beat on the estimate of $1.62. Net sales 181.52 billion, 181.52 billion, a beat on the estimate of 177.23 billion. Operating margin 13.1%, 13.1%, a beat on the estimate of 11.7%. Net sales 37.59 billion, 37.59 billion, a beat on the estimate of 36.68 billion. Physical stores net sales 5.79 billion, 5.79 billion, a miss on the estimate of 5.81 billion. North American net sales 104.14 billion, 104.14 billion, a beat on the estimate of 102.08 billion. With Amazon seeing Q2 net sales at 194 to 199 billion, with the estimate being 189.15 billion. Amazon see Q2 operating income of 20 billion to 24 billion, with the estimate being 22.86 billion. Meta now EPS $10.44, $10.44, a beat on the estimate of $6.43. Revenue 56.31 billion, 56.31 billion, a beat on the estimate of 55.51 billion. Operating income 22.87 billion, 22.87 billion. Family of apps operating income 26.9 billion, 26.9 billion, a beat on the estimate of 24.26 billion. Reality Labs operating loss 4.03 billion, 4.03 billion, a loss of 4.77 billion as compared to the estimate. Ad revenue 55.02 billion, 55.02 billion, a miss on the estimate of 54.16 billion, with Meta seeing Q2 revenue at 58 to 61 billion, with the estimate being 59.
I'm looking at Unity right now.
Billion. And Meta sees fiscal year capex at 100.
Come on, Unity.
To 145 billion.
Rip their faces off.
135 billion. Alphabet now. Revenue.
Note. Next target. R1, number 4, right here.
7.1 billion. Operating income 39.7 billion, 39.7 billion, a beat on the estimate of 36.19 billion. Google ad revenue 77.25 billion, 77.25 billion, a beat on the estimate of 76.21 billion. Capex 35.67 billion, 35.67 billion, a beat on the estimate of 36.39 billion. Google Cloud revenue 20.3 billion, 20.3 billion, a beat on the estimate of 18.41 billion. Google Search and other revenue 60.40 billion, 60.40 billion, a beat on the estimate of 59.08 billion. Revenue ex-TAC 94.67 billion, 94.67 billion, a beat on the estimate of 91.57 billion.
I don't see another one up here. I only see this one right here.
Microsoft revenue 82.89 billion, 82.89 billion, a beat on the estimate of 81.46 billion. EPS $4.27, $4.27, a beat on the estimate of $4.03. Cloud revenue was 54.5 billion. Azure and other cloud revenue ex FX plus 39%, a beat on the estimate of 38.2%. Q3 LinkedIn revenue increased 12%. Q3 Dynamics 365 revenue increased 22%. Cloud revenue 54.5 billion, 54.5 billion, a beat on the estimate of 53.78 billion. Windows OEM and devices revenue decreased 2%, with Microsoft shares rising 3%. Q3 capex, including leases, 31.9 billion, 31.9 billion, a miss on the estimate of 35.29 billion. Export content and services revenue decreased 5%.
Fuck yeah, Microsoft. Woo!
Alphabet here. Google Cloud revenue 20.03 billion, 20.03 billion, a beat on the estimate of 18.41 billion.
Come on, Unity, you can do it.
Alphabet says the strongest quarter ever for consumer AI plans.
Rip and dump on Ford. I can't see what's going on with Qualcomm. Did they rip it? Did they not rip? Can't see. Sam G dogging it.
Microsoft Q3 intelligent cloud revenue 34.68 billion, 34.68 billion.
Goog smashing it out of the park too.
34.32 billion. And AI business surpassed annual revenue run rate of 37 billion. So Amazon here, increase in purchases reflect investment in AI.
And be careful of that high on Google. The target, I think, is 370. I think they hit it. God, I love being able to get the fuck out before fucking tomorrow morning. No, it's such a relief.
6.7% after boosting fiscal year.
It's such a relief. Hold what overnight? Fuck no. I'm talking about you can't close fucking Google options right now. If you're in SPY options, every time we hit one of these bars, you want to get out. See this bar right here? I got out right there. There's a second one right there. If they can do the third one up here before 415, get the fuck out. The other thing, or unless you're in spreads, call spreads would have been fine. You could at least like call spreads. You don't have to worry about demand. It's a whole another bag of worms. You're asking a question there. I'm out. I'm flat. I'm flat. The whole reason you're not trading the underlying is because you have the optionality to get out at 415. Living and dying by that. You gotta like. I don't know if I didn't hear any stock split in there. So unless you're hearing like stock split,
headwinds in EU could significantly impact
results. Something like that. You need a mad rush of buyers on open tomorrow. Otherwise, it's all sellers taking profit. So, if you've never been there, it blows. It sucks balls. I have. It sucks. And then you got to stay in case you get the ramp on the open. You could have just longed on the open if it's going to continue to go up on open. They'll reprice the whole chain. Okay. I gotta go. I gotta get running. I gotta get out of here. And it's fucking raining. It sucks. Fucking rain. It's good being a runner in the rain, but I used to love playing soccer in the rain. But as a watching it, it blows.
Compared to the estimate of $1.58.
If you get a chance here to get out before 415, get the fuck out. Like right in here, when they hit this. Remember that you need the buyer on the other end of this too. You know what I mean?
eBay gross
or take your money and run, and then buy cheaper calls into the close. Like close, get out of here, get out, and then rebid for them with some of your winnings, so that you're not lose all your money tomorrow.
A beat on the estimate of 135.1 billion. eBay sees Q2 adjusted EPS $1.46 to $1.50.
I meant to say eBay should kill it, but I'm going to look right now. Did they do well? No? I'm surprised. Oh, no, they did well for a minute there. I like eBay right now. I mean, I've been liking on it for a while now. And give the poor some love. You guys are hilarious. All right.
Forward earnings here.
I try telling the poors, they don't listen to me.
43.3 billion.
They'll suck the indexes back in again and again and again and again.
Adjusted EPS 66 cents. 66 cents higher. A beat on the estimate of 19 cents. Forward sees fiscal year adjusted EBIT 8.5 billion, 8.5 billion to 10.5 billion.
This is getting actually kind of cheap here to long the close here.
Ford Pro EBIT.
If we can get down far enough, I think 0 dates for tomorrow will be good trade.
Plus 29% year on year. Ford Model E.
You can get this down deep enough.
777 million. Lower than the expected loss of 990.8 million.
There's another long in here. We're coming down early.
14.7 billion. A miss on the estimate of 15.52 billion. Blue EBIT 1.94 billion, 1.94 billion, a beat on the estimate of 506.8 million. Model E revenue 1.2 billion, 1.
Are you only being calls? Is it you and I in calls? Get out!
Ford still sees fiscal year capex 9.5 billion to 10.5 billion, with the estimate being 9.94 billion.
There's another call in here. You guys can 0 dates and I do 2 dates in here, but cheap. Get them cheap.
7.4 billion. And Ford still sees
or maybe get Monday.
Loss of 4 billion to 4.5 billion, and Ford still sees fiscal year adjusted free.
You can catch any Monday calls and it'd be nice. Okay. I gotta run. I will be here tomorrow. My voice isn't as fucked up as it was on Monday, so I will be here. Yesterday morning, my throat was couldn't talk. I need to slow down the amount of time straight streaming and chatting and blabbing. I'll see all of you guys tomorrow at 9:30 in the morning. Let's watch this really closely here. There was another dip buy down here too. Same expectations for tomorrow. Up. Nothing's changed. Same thing right here. Nothing's changed here. We just traded a big spike up. Can you imagine being like a call buyer of your underlying stock and you're just like crying right now? Ooh. And then I get to come back in and buy calls on all your favorite fucking stocks in like a week or two. It's gonna be nice. In like middle of May, the merry month of May. There's a sweet fucking dip buy in here. All right. I'll see you all tomorrow, 9:30 in the morning. Later.